Welcome back, everybody. Welcome back. Make sure y'all hit that like button, subscribe if y'all brand new to the channel. Gonna do a Sunday market update to begin the new week of trading or in the markets. Gonna do a review, go over some headlines, get into some news, some news events, and it's a new week in trading. So how's everybody doing? What's up, Ryan? What's up? Excalibur, what's up? Pizza Shark. Let me do something right quick. Make sure y'all comments come up in the live stream. But if y'all just joining, make sure y'all hit that like button. How's everybody doing? Go ahead and give me a roll call. Shout out your city, state, country, region, whatever you want to shout out. Go ahead and shout that out. What's up, Ike? What's up, Lawrence? We got New York in the building. We got Florida in the building. We got Jersey in the building. Shout out to Jersey. Shout out to New York, Florida. What's up, Scott? I'm doing well. I'm doing well. Hanging in there. Hope everybody's doing well on this Sunday. We got a new week in the markets, or a new week of life. So let's make sure we can start a productive week. And, you know, we're going to see this through. We're one day closer to y'all becoming retired and living the life that y'all choose to, live. What's up, Ed? Shout out to the Bay Area, California. Definitely hit that like button, y'all. Subscribe if y'all brand new. So I'm going to ask my audience. What I like to do is, because I can't keep up with everything. Y'all know me. I mainly stay in the markets. I stay in the charts. I'm always analyzing. I spend most of my time analyzing the markets. So I don't really do a lot of searching for news or keeping up with all the fundamentals. So if anything has come out, have y'all heard anything over the weekend as far as fundamental news? Y'all can go ahead and let me know in the comments. What's up, Tino? Shout out to you. And if y'all just joining, go ahead and shout out your city, state, country, region. Trying to show y'all some love wherever you're from. We are a global community. I appreciate my community and my chat because we are diversified. We are worldwide. So shout out to everybody wherever you're from. But what's up? What's up? What's up? If y'all just coming in, make sure y'all hit that like button for me. Ike, you said you heard the Federal Reserve chose XRP for settlement. That's good news. I pretty much already knew that. I'm not saying that. Are they coming out now, publicly saying that they're going to use XRP for settlement? Because if you've been in this space for a long time, you pretty much known that XRP was integrated with all these platforms. And the Federal Reserve is the central bank. So we all know the central banks want to implement distributed ledger technology. Most definitely. It definitely was coming, Ike. It definitely was coming. So I got 22 people in the building. I'm trying to see where y'all from. 22 people. Y'all shout out where you're from. If you already shouted out, you don't have to do that. Shout out where you're from. Your city, state, region. I'm starting this live stream kind of early this evening. Wherever you're at in the world, it might be late for you, but for me, it's kind of early. But we're going to get through it. Shout out to Canada in the building. Shout out to you, Ryan. Shout out to Richmond, Virginia. What's up, Mike? With that being said, let's go ahead and come, what I want to do first. Let's go ahead and look at some of these headlines that I've pretty much compiled that I find interesting so far. So let's go ahead and come to some of these headlines. So the first headline I want to talk about, if y'all didn't catch it today, I just seen this today. Let's go ahead and review the Treasury, well, Trump's Treasury Secretary. So let's go ahead and see what he has to say about crypto in the reserve, the crypto reserve. Let's go ahead and review and see what he has to say. I think this is just released today, so let's see what he said.
As we just heard from David Sachs, the Treasury is going to play a huge role in the future of cryptocurrency in America. But that's just one piece of the bigger economic picture. There are so many other components to consider. So how does it all fit together? Well, fortunately, joining us next is Treasury Secretary Scott Bessent, and he's keeping track of all of it. He joins me now. Secretary Bessent, thank you so much. Look, I think people are getting into cryptocurrency in a very big way. It seems like it's something that's here to stay. So from your perspective as Treasury Secretary, how does it fit into the overall U.S. economy, and where does the government stand on regulations?
Good. Well, thanks for having me on the show. And as I think this administration has made abundantly clear, digital assets are here to stay, and we are going to make the U.S. the digital asset hub of the world. For the past 4 years, the crypto community, digital assets, the administration retarded their growth, and we are set to accelerate that through a positive partnership and through smart regulation. Senate and House are both pushing through very sound, safe bills to bring crypto and digital assets onshore in the U.S. and to make sure that the U.S. is both the financial and the technological leader.
Tariffs, it's something everybody is talking about right now. I want to give everybody a listen to President Trump. He feels very confident about the outcome of all these tariffs. Listen to this really quickly.
You're going to have drops, and markets are going to go up and they're going to go down. Yeah. But you know what? We have to rebuild our country. Our country has been stripped of its jobs, of its factories, and we're going to change it around. And it's all taxing policy. You know, it's really a policy because we have great workers, great people. It's really a policy of taxing and incentives. And I'm bringing the incentives back.
So the president says there he's bringing the incentives back. He wants manufacturing growth. He wants job growth here in the United States. That's really the overall goal of these tariffs. But, Secretary, are you as confident as the president that these will be effective?
Laura, I couldn't be more confident. And look, these tariffs have become a bit demonized over the past few weeks. I think over the coming weeks, as the administration, led by the president, Commerce, USTR, with some add-ons from Treasury, we are going to see a long-term plan for reindustrializing the U.S., as the president talked about, and for making trade more fair. The bottom 50% who don't own assets should get real wage increases, enjoy economic security, and that's why President Trump is in.
If you was paying attention, did you just hear what he said? The bottom 50% of people who don't own assets, they deserve more wages. So these crypto assets that we all like to invest in, they've been cheap for pretty much years, excluding Bitcoin. But the rest of these assets have been cheap. And I'm here in a minute. I found the article talking about how most Americans are voting against the crypto reserve. They did a poll, and a lot of Americans aren't with the crypto reserve. What most Americans want right now, they want increased wages, they want federal funding, and they don't even look to they don't look to invest into digital assets or assets, period. They just want the government to come in and continue to fund these programs and this and that, instead of taking initiative and building themselves up by diversifying into assets. But I'm gonna continue this video.
In the Oval today.
You've talked about an affordability czar. Tell me what that is. That sounds like something that a lot of people could get behind.
Look, I think it's the issue of the day. past 4 years, we have seen this affordability crisis in the U.S. Average households, working Americans, unable to groceries, insurance, healthcare, housing, autos, and we've got to, we are in the first stages of putting a brake on the inflation. So that's the first step. We're going to have an affordability czar, an affordability council, and that person and that group will be tasked with helping me find solutions for the American people, whether it's in housing, it's in insurance, it's in energy, it's in groceries. So what are the things that we can do short-term, medium-term, and long-term to make sure that we never see a spike like this again?
Well, that is music to a lot of people's ears, I think, who've been struggling, Secretary, over the past several years, and help is on the way, and we like the sound of an affordability czar. Now, let me ask you this. This is a question I always wonder. I did not know that the Treasury Secretary was actually fifth in line to the presidency. Do you ever think about that?
Well, for those who have watched.
Did y'all ever know that? Did y'all know that the Treasury Secretary of the United States was fifth in line? So if anything start happening, let's say all the top people go down in a plane crash and the secretary wasn't on there. Did y'all know he was the fifth in line for the presidency? I didn't know that. You learn something every day. So I'm gonna move on from this. I want to talk about this article. I want to talk about this article that I randomly came across. You know, I was just trying to figure out some things to present to this live stream, and I found this article very interesting. It is titled "Crypto Reserve Controversy. Poll Shows Americans Are Not on Board." So I find it interesting. And as I scroll down during this, reading this article, it talks about, let me zoom in for y'all. It talks about 51% of the majority of Americans do not support the creation of cryptocurrency, strategic reserve, a proposal that the United States Donald Trump has been pushing since election in November. So 51%, or the majority of Americans, do not support the creation of a crypto strategic reserve. And I'm assuming it's because of the current times that we are in, because Trump is getting in there. He's changing a lot of policies and it's impacting certain people. It says a recent poll revealed that majority of American voters oppose the establishment of a crypto strategic reserve, which indicates that the U.S. voters want the government to spend less on cryptocurrency. I find that interesting. Now, where this person came up with this article, who knows? That's why I don't really keep up with the news. But we got the crypto treasury. I mean, we got the Treasury telling the public that we are going to lead. America's going to be the number one leader in the nation when it comes to crypto. But then there's the American people. And I say this, I kind of find it true, me personally, because how many of y'all go throughout your day? How many people do you personally know that are involved in crypto? Like, can you name 10 people that you personally know that are involved in crypto? Are you the only one? Are you the only one in your family that is involved with crypto? I just find it interesting. So I don't think this article is probably not too far-fetched. Let me keep continuing the reading. So they did a survey, and it was conducted by the Advocacy Group for Data for Progress. And it showed that the majority of Americans are not in favor of creating a crypto strategic reserve, wherein the U.S. government will fund the stockpiling of the cryptocurrency to build a national reserve. The poll revealed that 51% of U.S. voters oppose the creation of a strategic reserve for digital assets, while only 34% of Americans expressed that they are supporting it. And then they have this little presentation down here, and it says voters want more funding for Social Security and Medicare and less for cryptocurrency. So I'm assuming this is a lot of people that work within the federal government. And of course, they're cutting a lot of federal jobs, a lot of federal programs. And these probably are the people who have an issue with cryptocurrency. I'm just assuming. Let me see right quick. Y'all hold on right quick. I got to bring these comments back up. One second. Make sure y'all get y'all comments up here. But anyway, I'll worry about that later. But it says if you pay attention to this little this outline right here, it shows you the percentage that people want more of, the percentages that most Americans want. They want more Social Security. So they're showing that they want 65% Social Security and Medicare. They want more budgets on roads, bridges, and public transportations, Medicaid, public education, renewable energy and efficiency projects, NASA funding for space, artificial intelligence research is down here at 20%. And then look all the way at the bottom. They want less funding, which is around 10% federal. And they want most of the federal aid to go to Social Security. So, hey, y'all tell me what y'all think about that. Y'all tell me what y'all think about that in the comments. I found this article pretty interesting. Let me read some of these comments. Donna, what's up? What's up? Daryl, what's up? What's up? It says, people think I'm crazy for being in crypto. Just stop talking about it as much. Of course, that's pretty much what we all pretty much gone through. So the next video, since Americans are opposing cryptocurrency, y'all always know I like to go see what the people want. So I like to look at these TikTok rants. Let's go ahead and see what the people are saying. And this video right here is dealing with the middle class. The middle class, or people are tired of being in the middle class, and they want more government help. So let's see what the people got to say. And after this, we're going to go ahead and come to the charts, and we're going to do the analysis. One second. But what's up, everybody? What's up? What's up? What's up, Robert? What's up, Excalibur? Trying to figure this out right quick. This shit right here is crazy. All right, got it working. Apologize for the delay.
I have been seeing so many working class, middle to lower income people talk about how much taxes they owe this year, and I cannot help but to think about how much we are getting scammed by corporate greed. I'm talking as the years progress, corporations are hitting record high profits, all while price gouging and tacking on extra junk fees, but avoiding and not paying their own fair share of taxes. Because did you know that MAGA Republicans are trying to enact a $5.1 trillion tax cut for their...
So before I continue, my point is with this video, if y'all just joining, I played a video of the new United States Treasury Secretary. He's promoting that America is going to lead #1 in crypto. But then I just read an article where they did a poll where like 51% of Americans are opposing cryptocurrency. They do not want funding for cryptocurrency. But now let's see what the people are ranting about. I like to see the people and what they're ranting about. And these same people that I'm about to play on this video, they are clueless about, like, they're instead of complaining, the opportunity is right there in front of you. The government is even leading the way for the sheep or the uninformed retail people, the average worker. They're putting it in your face, but you're opposing the opportunity. So I don't want to hear no complaining later on when the opportunity was right here in your face to invest and take advantage of this wealth transfer. So let's see what the people got to say on their day-to-day.
super rich and greedy corporations. And I'm no mathematician, but that would give the top 0.1%, literally households making more than $4 million a year, tax handouts averaging around $175,000 per year. That is more than double the typical American family's entire annual income. They're not only trying to undo the 15% minimum corporate tax rate that President Biden signed into law, they're demanding that we pay for their tax cuts by gutting programs that we've paid for and earned. And they continue to oppose policies that lower our costs. Make it make sense. Then every time we try to sound the alarm or make progress on these issues.
And check it out. This is a losing battle. Like, again, you're not going to change shit. You just got to give it up. So the only thing that you can change is your reality. The only thing that you can change in life is your circumstances. Stop involving yourself with all the politics and all the stuff that's going on between two different parties or groups of people. You need to be asking yourself, what can I do to change my situation? Arguing about this stuff and ranting about it, you're wasting time. It's not going to get you nowhere. So you gotta be, you gotta be you gotta be a lone wolf out here in this society, and you gotta go for what's yours.
MAGA Republicans try to sabotage our efforts with threats of like defaults and shutdowns. I just feel like time and time again, Republicans have proven that they can't be trusted with our economy, and that they'll always put the rich first. That's my 5 cents because it's worth more than 2.
Hello, everyone.
So y'all just heard that. She's saying she's blaming Republicans, which I'm not on either side of the fence. They all work together. And at the same time, she's saying that they always going to do for the rich. But what is the rich currently doing? Aren't they investing into digital assets? Aren't they investing into digital assets? They're putting it right there in your face for you to see. They're putting it right there in your face so that you can see what they're doing. The Treasury, the United States Treasury, secretary is telling y'all we're going to be number 1 in crypto, and some people don't quite grasp that 51% of Americans don't want cryptocurrency funding by the government. So hey, I guess you don't want to do what the rich do. I guess I'm not sure. Let's continue. Let's see what people in this segment of my live stream. I like to see the rants from the people, how they're doing in the economy and what their feelings are, because there's nothing like going directly to the people. You can't always rely on the mainstream media. So let's see what the people are saying.
Taxes. Rich people don't pay taxes. Poor people don't pay taxes. If you're at about 0 to 30,000 a year, you get food stamps, you get Section 8 housing or subsidized housing. You get lots of tax credits back when tax season comes. Those people pay no money in taxes and get 10 grand back. And if you're rich, you're using all your write-offs between your houses, depreciating real estate, losses on business. You're not paying any tax. And if you make about 60,000 to 250,000, those are the people that pay the taxes for the entire world. Those people can't qualify for lower housing. They can't qualify for food stamps. They can't qualify for financial aid with school. Those are the people who is the worst spot you can be in. And I was in that spot for a long time and wondered why I was the one paying all the taxes until I learned how to grow out of the middle class. So if you're in the middle class, obviously you don't want to go down. You want to grow out of it. And you have to stop thinking like the middle class, where you have a house that's a huge mortgage payment, 2 or 3 car payments, student loan payments, and you work till you're 65 because that's how you stay in the middle class. You have to start thinking of ways to how to escape that and achieve financial freedom and passive income, and how to find these tax write-offs.
So what are one of those ways to achieve financial freedom? Is right there in your face, but more than 51% choose to not, like, they do not want to invest into cryptocurrency. As far as, according to this poll, more than 51% of people do not want to invest in cryptocurrency. They want more Social Security. They want more Medicare. They want more projects for infrastructure. They want Medicaid, public education, even NASA. They rather more funding to NASA. What is NASA doing for y'all on a day-to-day? Would you want more funding for NASA or want more funding for cryptocurrencies? I'm just saying. And then, hey, it's just, I'm not understanding. There's a lot of complaining. Let's continue the video, and then I'm gonna move on. Let's continue the video.
or you can keep money, because to me, you don't have to necessarily earn more money if you're keeping all your money. If you're making $200,000 a year now and you're paying $60,000 in taxes, if you can just figure out a way to do tax write-offs through business, through real estate, then now you're making an extra $60,000 a year by not paying the government taxes, legally, of course.
Hey Meta, can I get some discussion starters for Moby Dick?
Here are some topics.
I don't know about you guys or if we just have the worst luck, but I swear any time that there is money sitting in our savings account, something on our house breaks. Every time. Every time it's like it knows, oh, you're trying to save money for something? Well, how about not? How about you go fix whatever's broken?
I just got home from working an 11-hour shift, which really honestly took up about 12 hours of my day. And while I was at work, I was thinking, how do we jump classes? How do we get from lower class, middle class, etc., to
Excuse me, my bad, y'all, my bad. What I was saying was, and I'm still getting used to live streaming. What I was saying was, what's one way to jump the middle class from going from lower class to the higher class? What's one way to do it? Investing in cryptocurrency. But majority of Americans still don't believe in cryptocurrency. They still don't own cryptocurrency, or they're not aware of it. According to the poll that I showed y'all, more than 51% don't want no type of federal funding towards crypto. But hey, let's continue to see what the people got to say, and then I'm gonna move on.
upper class? You get what I'm saying? Because I made a video before just talking about the job market. And quite honestly, when you think about it, a lot of the middle class is working paycheck to paycheck. And this is not to sound ungrateful. I am truly still so blessed to have a roof over my head, to have found a job after searching for so long, to be able to still get groceries, etc., and things like that. But still thinking about how the economy is and how we're getting the degrees, we're getting the experience. We want to do the work. We're not hiding from having to do hard work and things like that, but not getting compensated the way that we should. With working, there's less guarantees, especially when you think about Social Security, pension plans. Those types of things aren't offered to us. And more specifically, I've always been interested or pursued entrepreneurship. And even then, there's kind of like these barriers here, because how much of the money that you're bringing in can you risk to do these business ventures? And how can you even fund these ventures if you're not even getting compensated well for the work that you're doing in your job? Now, these jobs, they take away time, mental effort, and you're still not getting paid well for that. So if you're low on time and you're low on funds, how do you get yourself kind of out of this repetitive cycle? That's like the biggest question. And when it comes to business ventures as well, I feel like what you need most is capital. You need money to invest. You need money to purchase properties. You need money for startups, etc. You get what I'm saying? So although I have some side hustles, I have some businesses that I have started for myself and I want to thrive and do well, I can't help but to think about the things that kind of slow the process up for us to kind of see success. When it comes to like businesses and things that you do independently, there's so much trial and error. And again, it brings me back, how much are we able to risk if we don't have a security blanket, if we don't have things to follow on, if we don't have other people to invest in us? So on my whole 10, 11 hours that I'm at work, I'm like really thinking about like, what are the steps that I personally can take? What is a game plan that I can make for myself? Because quite honestly, I feel like life is meant to be enjoyed, is meant to be able to.
So somebody help her out. What are some steps that she could take? And the governments are putting it right in your face. You know, what are some steps that the American people could take? But they're refusing, and they are denying what's right there in front of them. There's no excuse in 2025 within the age of information. There is no excuse in 2025 with the age of information not to deep dive and research investment opportunities, because you know that we're being inflated away. People are struggling. There's no more middle class. Like, they're wiping away the middle class. So you are left with no other option to either thrive or be a victim. You know what I'm saying? Thrive or be a victim. So I'm going to leave it at there. I'm going to leave it right there for that one. I'm going to watch one more. So I found this video with, let's see. Let me see this guy's name. I forgot this guy's name. He works at Ripple, and he's dealing with over there in Dubai. He's working with Ripple, and he's over there in Dubai. So let me see right quick. This damn software is messing up, man. You know what? I'm about to say F it and just continue on with my live stream, but this shit is not working. Okay, here we go. Let me see right quick. All right, this guy right here, he works at Ripple. Let's see what he has to say about what Ripple is doing over there in Dubai, and they're making progress.
Talk all things Ripple, if we can, and the ripple effect. Ripple, the leading provider of digital asset infrastructure for financial services. No stranger to this part of the world. In fact, was it around about 6 months ago, the beginning of October last year, we got news coming through from the DFSA and the DIFC authorities as well that Ripple had secured in principle approval from the DFSA to expand its services from the Dubai International Financial Centre. Well, the good news is that in principle has now become principal. Blockchain power company has now been fully licensed by the DFSA. Good news, therefore, for the Managing Director of Middle East and Africa at Ripple, Reece Merrick, who's been kind enough to join us live in the studio. Thanks for your time this morning.
Thanks for having me. Great to be here.
Yeah.
So he's he's the director for Ripple in the Middle East and Africa. So let's see what kind of key points that he has to say. So he's over there in Dubai in the Middle East. Let's see what he's talking about as far as the progress of what Ripple is doing. I found this kind of interesting.
Congratulations on ticking all the boxes required by the DFSA and the DIFC. What does this mean for you and the team at Ripple?
Look, essentially, this is the first, we're the first blockchain-powered cross-border payment solution that have full approval and regulation to operate in the region, which is, extremely exciting. And certainly evidence is the forward steps that this region are taking to allow innovation to be able to flourish. So what does that mean? That means that we're able to service FIs, payment service providers, exchange houses and other corporates to be able to utilize blockchain and crypto with their cross-border settlement. And, being one of the largest hubs for cross-border settlement, we see a huge amount of interest there.
You said it, Reece. We are the hub word, that's
Absolutely.
for sure. How often do we use that at the moment? Look, Dubai long made plays of being a hub for aviation, a hub for...
So Dubai currently, they're claiming, is the hub of innovation in cryptocurrency or whatever. So what y'all think? Y'all think America is going to pretty much come take that spot over Dubai? Cryptocurrency is going to make it interesting nationwide as far as, not nationwide, but globally. Who's going to be the leader in crypto? You already got the UK. They're claiming they're going to be the leader. You got the Middle East. They're going to be the leader. And then here comes America. They're claiming they're going to be the crypto hub. So what y'all think when it comes to innovation? What is that going to do for the entire market, the entire ecosystem? What y'all think about that?
For tourism, a hub for this, a hub for financial services, a hub for blockchain at the moment, the UAE and Dubai, is that something we're seeing?
Absolutely. I think, we've seen so many advancements when it comes to regulation in this region, which first and foremost allows businesses, both international and kind of startups in the region, to operate and build products with clarity. And, that certainly lacks in other jurisdictions. So what does that mean? That means that, the UAE is attracting a lot of talent. It's attracting a lot of international businesses. Ripple are a global business, but we're really planting the flag in the UAE because we have that level of support from top down in the region.
Blockchain is not new. I don't need to tell you that. You've been very much invested in it for a long, long time. But it might be new to a number of listeners and viewers. It's becoming a lot more mainstream for us at the moment. How is it perceived in the financial sector at the moment? Is that evolution at the moment? And what is the UAE doing for its reputational play in the financial sector as a whole at the moment?
Look, I've been in the industry and working for Ripple for 7 years now. I can tell you 7 years ago when I was in London meeting with large FIs, big multinational banks, that the topic of conversation is very different to what we see today.
Yeah.
Right? People are looking at ways to implement blockchain and crypto technology into their offerings. And really, I think that is an advancement in, the sector. That's a lot of institutional interest that's coming into the market. And there's a lot more confidence with regulation that allows them to operate in this space. So, the UAE has certainly played its part from a regulatory perspective to enable more interest. And I think we're going to see a flurry of, large institutions really kind of adopting this technology.
Yeah, it's so interesting you mentioned regulation there. No shortage of efforts being applied by the UAE and the Dubai authorities into regulation of the sector. In terms of practicalities, it's interesting that we're chatting to you on the same day. I was just talking to Kaspersky a few minutes ago about the rising problem of bank frauds, the rising problem of losing, of being affected by people stealing your details, etc., online. How is blockchain impacting global payments at the moment? How is it improving global payments?
Look, if you think of cross-border payments today, essentially they're built on technology which was from the 1970s. So in essence, if I want to move money if I'm a corporate and I want to send funds overseas, typically that payment could take, 1-2 days, may fail, will be extremely costly to do that. So the benefits of blockchain is you can move value in real time at a fraction of the cost. So really it adds that level of speed, efficiency and transparency whilst reducing the level of, failures along the way.
Blockchain, obviously here to stay. Crypto technology is obviously here to stay. Again, what do you say to the naysayers out there who might be listening in or otherwise going, oh yeah, this is just a little bit of a trend at the moment?
I think from a Ripple perspective, we're very focused on building utility around crypto, around blockchain. I think that from our perspective, it's about education. Recently we partnered with the NYU Abu Dhabi, where we basically have a blockchain for business strategies leadership course for financial leaders to really understand the benefits of the blockchain technology, how crypto and more broadly digital assets can really kind of aid their businesses. But it is a level of education, right, that is needed. And then there is certain areas where they can see the benefits and be able to implement them processes into their offering.
In terms of that education as well, I mean, I know that you and the team have worked closely with DIFC, the Innovation Hub, and moving things forward as well. Is that key to getting the message across, to educate from as early as possible?
Absolutely. Yeah. I think, there's a ton of interest, but often, where do people go to find out all this information? They can go online, but what we want to be able to do is nurture developers to be able to really kind of show them the benefits and what they're building. And our partnership with the DIFC Innovation Hub is part of an accelerator program, because you can have a great idea to build on a blockchain and the XRP ledger, but then how do you build that into a business? And really that's kind of what we believe is the missing step. So having that support, that mentorship, that, hey, if I need a regulation, where do I need to go and get that? We found that our partnership with the DIFC Innovation Hub has really kind of accelerated that level of interest and level of growth in the region.
Right, let's find out what's next if we can, because congratulations.
All right, that guy works for Ripple. He's over there in the Middle East handling business for Ripple. And he's pretty much saying, like, it's an education. And this ties in what I was saying, like, far as the average American. And it's like 51% of Americans who are denying crypto. They oppose of crypto when it comes to federal funding. And That's because they probably lack the education on what's crypto. But I'm sure everybody in my live stream understands some type of level of cryptocurrency from a fundamental level. So with that being said, I'm gonna end that video. I thought that was insightful a little bit. Y'all can come check that out. Look at the title. Let's go ahead and come over to the XRP rich list. XRP rich list. I haven't talked about this yet on my channel. I'm not asking y'all for how much XRP y'all own. This is just to get you an idea of where you should be at as far as, you know, your goals or whatever. This is the XRP rich list. And over time, as institutions and large governments, large institutions and governments, central banks, as they accumulate this digital asset, this rich list is going to get smaller and smaller. So it's going to probably most likely over time require you to have less XRP to be on this list. So right now, I'm not even looking at the 5% or the 1% or whatever. Let me come down right here, the percentage. So the 0.01%, nobody in this live stream, maybe I might be wrong, you never know, but I'm looking at the 0.01% right here. This is governments, central banks, mainly probably central banks. That's who's in this category right here, this 0.01%, and Ripple, central banks, and governments. I don't see governments owning more XRP than central banks though. So let's be clear. I'm looking at the banks owning the majority of these assets. And then the 0.1%, this definitely is probably governments and some banks and probably some corporations. The 0.2% right here, again, pretty much from the 0.01% to the 0.5%, I'm not expecting too many people to have that much XRP. Now, we might have some people, some individuals, some retail that do hold 100,000 XRP. So we do have some people that are up there in that tier. There's roughly around 31,000 accounts. I'm going to say there's a lot of individuals, corporates, banks that own that much XRP. And then the 1% all the way down to the 10%. You know, the 1%, you need roughly around 62,000 XRP. No, excuse me, my bad. The 1%, there's roughly 62,000 accounts, and you roughly need around 52,000 XRP. The 2%, you need roughly around 26,000 or a little close to 27,000 XRP. The top 3%, you need roughly around 17,000 XRP. The top 4%, you need around 11,000 XRP. Top 5%, 9,000. The top 10%, 2,500. And over time, as this asset continues to go higher, this list will get shorter and shorter. And having less XRP, let's say like 10%, probably in the future, 10%, the top 10% will move up into like maybe the top 2% over time. And then like the top 2% might move up into the 0.5%, whatever, etc. We shall see over time. But I just wanted to cover that right quick because I never talked about the XRP rich list. You can say it in the chat, or no, I'm not asking for your XRP. I don't really care how much you own. But if you're brand new, I want to hear from the people that are brand new to crypto. I'm gonna say sometime last year, November, December. Where do y'all stand? Don't tell me how much XRP you have, but what are your goals? If you're just brand new to crypto, what are your goals as far as this list? And I'm talking about the people that just came in like fourth quarter 2024, between October, November, December. Where do you stand when it comes to this list? And where do you strive to get to? A lot of us that have been in crypto or XRP for 4 or 5 years, we understand this. We understand this list and where our goals was resting. What's up, everybody just joining? Make sure y'all hit that like button, subscribe if y'all brand new. Got 46 people in the building. If you haven't hit that like button, go ahead and hit that like button for me. Show some love. I was buying the day it was taken off the exchange. You said you're accumulating. Top 1% would be nice. I need to sell some of my whatever you're trying to sell. Ike, I know you up there, Ike. I know you up there. You a baller, Ike. Can't too many people come up there with you, Ike. Who else? But definitely shout out to y'all, man. Most definitely, like that 1%. I ain't gonna lie. Like right now at this point, it's harder to attain that 1%. But some of y'all might be liquid. I can't say that because some of y'all got that. Some of y'all got cash. Some of y'all are balling. So that definitely the goal would be to that top 1% for some of y'all. If you're just joining crypto and you're new to XRP and you're just taking the red pill and you understand, oh shit, banks are using this, you might want to strive for at least the top 4% or higher. But I'm gonna go ahead and say, like, these top 4 spots up here from 0.01% to the 0.5%, don't try to be, don't go homeless trying to accumulate this much XRP. You really don't need this much XRP. Remember, XRP is for the institutions. They are not for retail. So you don't require that much XRP because you're not going to be utilizing it like a bank or institution will be utilizing it. Ike, you said it's almost impossible, but the top 2%, ZZ, most definitely. I'm gonna get into the charts. Here we come. I see a lot of y'all asking about my forecast and my analysis. We about to come to the charts. I gotta kind of make it entertaining. I'm trying to grow my live stream. And how many of y'all would be willing to come up here and chat? I need to see who would be able to come up here and chat, give your opinion. I will give you the floor and let y'all communicate to me. I'm trying to figure out how I'm going to do that. But I might do like a hotline, or I might do like a video call where y'all can like take the link, come in the live stream, and I might allow y'all to I will give y'all the platform to pretty much speak on what you feeling, what's your sentiment. So I'm working on that currently, but I'm just trying to see who all would do that, who all would come on my live stream and engage with the community. So that's that. Now let's go ahead and get started. Most of y'all like me for my analysis. Let's go ahead and get started with the technical analysis side. What's up, Hamid? Appreciate everybody joining. Got a live community this evening. 49 people in the building, 50 people in the building. Make sure y'all hit that like button. So right now we are in the new week of trading. We have just begun the new week in the market, a brand new week. This is currently the 3rd week of March. We all know we got 4 weeks in the month, and we are currently in the 3rd week. I'm really trying to get this week over with. I'm really trying to get this last month over with. Once we enter April, that will be Q2 2025. So Q1 has been very volatile, very choppy. They have been liquidating a lot of people out the market. And if you're new to my channel, I subscribe to it's not that I subscribe to the idea, but the type of analysis that I do is smart money concepts, algorithmic trading. If you never heard that before, the markets are algorithmic. They are controlled. So when I get into my analysis, you might see some things that you've never seen before. So first thing I like to do is I like to look at the economic calendar for the upcoming week. Anytime we have news releases, the red folders represent high impact news. The orange folders represents medium impact news. Whenever you see these red folders, this is when the market makers inject liquidity into the market during specific times of the day. So as we look out for the week upcoming, we got some high impact news Monday. So I already can tell you that the markets from Monday to Tuesday is going to be probably stagnant. It's not going to do much. How do I know that? Because the markets are algorithmic. So Wednesday, we have federal funds rates that's dealing with the interest rates. So that we're going to get an interest rate announcement. And also we got FOMC meetings. So you can expect a lot of volatility on this day on Wednesday, a whole lot of volatility in the market. So just expect a lot of volatile price action on top of anything else going on, like Black Swan events or crypto headlines. We also got a lot of things going on in Congress when it comes to crypto. So the Senate, Congress, they're all trying to get the crypto regulations in order. So a lot of that stuff is impacting the market currently. And just pay attention to that. Keep an eye on that. I rely on y'all. I rely on my community to tell me what's going on the day to day, because mainly I focus on charts. I focus on, I don't really, me personally, I don't require fundamental analysis. I just focus on the charts. Thursday, we got unemployment claims, and then Friday, we have no news. So with that being said, let's go ahead and come over to the crypto matrix. Let's come up to the crypto matrix. What's up, Izzy? What's up, everybody just joining? Make sure y'all hit that like button, 32 likes. Let me make sure you subscribe as well. So this is the crypto matrix. This is where I look at multiple different asset classes or different charts, different assets. Currently we got XRP at 230. XRP currently trading at $2.30. We got XLM trading at 26 cents. We got XDC 6 cents. HBAR 18 cents. Bitcoin down to 82,000. Ethereum currently trading at 1,800. Algo at 18 cents. Solana $126. So with that being said, let's go ahead and start off the analysis with XRP. We're also going to get into the stock market and also gold. So here we are currently on the 3-month time frame for XRP. If y'all know, this is a long-term time frame. Very long-term, drawn-out time frame. Each one of these candles that print in the market takes 3 months. So if you look at the current candle so far, we have 15 trading days left. So out of 3 months, we have 15 trading days left for the first quarter. This candle right here represents Q1, first quarter 2025. And you can see what we have done so far. What have we done so far? We came up, took out the old high right here. This old high in the market, that was buy-side liquidity. Buy-side liquidity above the market. There are pending orders. The market makers leave behind pending orders on both sides of the market, whether that's the buy side, which is above the market, or sell side below the market. They leave behind their orders in the market. Retail has no idea what's going on. Y'all should know that if y'all been watching my channel. You say you think we getting that busy, Daryl, and you already know, Daryl. So again, like I'm waiting so far right now. I'm waiting for this candle to close. Really, pretty much, I'm done for the month of March. I'm not anticipating nothing else. Y'all might as well take a break. Take a break from crypto until the end of March. Whenever April 1st comes, y'all might as well come back to the market then. Until then, I'm not anticipating nothing else in the market because we already done a lot of damage within the first quarter. So if you're new to my analysis, the markets are algorithmic, and I'm going to highlight a BISI, a buy side imbalance, sell side inefficiency. What is that? Some of y'all might be asking, what the hell is that? Well, the market is algorithmic, and this price action right here, it was inefficient, meaning it left a gap in price. It left a void in price. So what I need to do is I'm going to highlight that void. And if y'all been watching, y'all sure already know what that is. It's a fair value gap in the form of a BISI, which stands for buy side imbalance, sell side inefficiency. Now, this fair value gap is not valid yet. It's not valid until we get this candle closed. So that's what I'm waiting for. It's not valid until this candle closes. Once this candle closes in 15 days, we will print the Q2 candle, quarter 2 of 2025. And if that happens, well, within 15 days, a lot can happen in 15 days, which I'm not expecting nothing to happen in 15 days. But let's say we just rally higher and we leave where we're currently at in price. Let's say we just rally higher and we close strongly higher. Well, I'm still gonna refer to this gap below the market, but we're reaching for higher levels. I'm gonna say that. But if let's say we was to close this candle right now, today, the following candle that prints on the canvas, it's gonna want to reach down for this large fair value gap in the market. Let's go ahead and highlight the price level. So what I do is I take a Fibonacci, I lay it on the high of the fair value gap down to the low. High of the fair value gap down to the low. And remember, each one of these candles take 3 months. So Here goes the price levels in case we want to drop down to touch these levels. There's $1.78. There's $1.50. We got the midway point of the fair value gap. That's $1.22. The lower quadrant, which is the 0.25 level, that is 94 cents. And if they want to get real crazy, which I'm not anticipating that to happen, I don't see them dropping it back down here to allow retail an opportunity. I'm sorry, retail, you're not getting the opportunity. I'm thinking like a market maker. You're not going to get another opportunity from me if I'm the market maker to buy XRP below $1. I'm just sorry. That's what wolves do. That's what wolves do. They're not going to let you get another opportunity to get in sync with what they're doing. You're going to have to buy right now at $2.31. So how many people right now are buying at $2.30 or above $2? You're not going to get that opportunity. And when this happens, if this happens down where they want to retrace down to discount, that's going to catch a lot of people off guard. That's going to put a lot of people underwater. The people that's buying right now is going to put you underwater because you're not aware that the market is algorithmic. So that's me forecasting out into time. So again, like I said, we got 15 trading days left for this candle to close on the 3-month time frame. And as I drop down to lower time frames, I'm going to keep that sentiment in mind, keep that long-term perspective in mind that we're waiting for the month of March to close. So Q1 goes from January, February, March, end of Q1. April, May, June, that's Q2. So whenever this new candle prints, that's going to be the 3-month candle for April, May, and June. So that's what we're waiting for. So let's drop down to the monthly. Down to the monthly time frame. Look what the current candle has done. Each one of these candles roughly have 30 trading days. So every one of these candles take around 30 trading days to complete. Some months have 31 trading days. Low down. I've been low docs. I've been reading your comment. Are you brand new to the channel? I've been looking at your comments. You just stuck on. You're fascinated why XRP is trading at 230. That's because the market is consolidating. It's consolidating. There's nothing going on right now. As I drop down to lower time frames, you're gonna see what I'm talking about. So let me cook right quick, and hopefully you're here to learn. My channel is an educational channel, so when you come to my channel, be here ready to learn. Take a pen and paper and learn what I'm teaching you. I appreciate it. For the new people, make sure y'all subscribe to the channel. Hit that like button. So the current candle, we're just consolidating right now. That's why you see this candle. This is a long-term chart. The monthly time frame is a long-term chart. Each one of these candles take a very long time to print. And if we just zoom out, this is a monthly time frame. Imagine back when the market was consolidating, how long and drawn out this was. A lot of y'all are new to the XRP and the crypto market. But when the market was consolidating sideways like this for years, imagine enduring that. So a lot of y'all are just coming to the markets or XRP and you're not used to what's going on in the market. And what I just highlighted there right there was years of consolidation. Years. Each one of these candles roughly take 30 to 31 trading days, excluding February. We all know February has 28 trading days. But imagine when the market was doing this and each one of these candles took 30 days. How many of y'all can endure that? How many of y'all could sit there and endure this consolidation? Well, a lot of us have. A lot of us been here. So a lot of y'all are the new wave community, the new wave of people coming to XRP. Now, there's still opportunity in the market. You just wasn't able to buy it at a discount like that. Now we're in a new price range. So you have to get it. Whatever the market is offering right now, you either got to get it at a discount or you want to sell at a premium. So right now, for the people that are new to XRP, you need to be looking for discounted opportunities. All the market does is go from discount to premium, premium to discount, premium to discount, discount to premium. So right now we're at a premium. And what I'm highlighting below the market, it hasn't formed yet, but it's coming. This will be a large discounted opportunity. But how many of y'all are being patient? How many of y'all are scrambling? Every penny that you get, you're trying to throw it into XRP, and you don't care what price level you're trying to buy it at. You're just trying to get in the market and throw it at any price level that you can. You have to exercise patience. You have to exercise patience. And you know I'm speaking to some of y'all. Some of y'all know I'm speaking to that every time I get paid, I need to buy me some XRP. I don't care if it's $2. It's still cheap. Guess what? You're not doing it right. You're not doing it right. So if you notice so far this month, we have 15 trading days left. We have not went up and took out the previous month's high. If y'all know, or if you're new to my channel, above old highs is buy side liquidity. Below old lows is sell side liquidity. So right now we're just trading inside of this range, which was from last month's high, which was February, and last month's low. We're just ranging. So as I drop down the lower time frames, you will see the market consolidating. So I got 56 people in the building. If y'all just hanging out in here or you haven't subscribed, go ahead and hit the like button and subscribe to the channel. I appreciate the love. So from the monthly time frame, it's dropped down to the weekly. So here it is. We just began the new week of trading. You see the current candle, this current candle right here. We have 7 trading days left. So on every weekly candle in the crypto market, there's 7 trading days that we have to complete this candle. Again, this time frame is a long-term time frame. So it's a long-term chart. The weekly time frame is a long-term chart. So last week, what did we do last week? We dropped down, we took out old lows below the market. Y'all see that? We dropped down, took out old lows. The market always seeks liquidity. The market always seeks liquidity. Remember that. So we dropped down, took out the old lows. Below those lows were pending orders left behind by smart money. So after we did that, you can see the market kind of rallying higher. So if y'all notice, late last week, we started getting consecutive days closing green. Well, that's because smart money buys at discount. See this monthly fair value gap? That's a discounted level. Remember, look at this Fibonacci, this large wick. We don't ignore wicks in the market. Look at this large wick right here. Inside of this wick is ghost pools. So let me highlight the ghost pools that's inside of that wick. Right there. So on the weekly time frame, we drop. First of all, the market profile is a consolidation. The market profile is a consolidation. The market only does 4 things. Consolidation, expansion, retracement, reversal. That's all any market that you're looking at. That's the only thing that it does. Consolidation, expansion, retracement, reversal. Remember that. Take notes. Hopefully y'all got pen and paper. Or if you don't have pen and paper, go back and watch the live stream. Consolidation, expansion, retracement, reversal. You're probably going to start hearing me in your head repeating this stuff. Some of y'all already have heard me repeat this and now it's embedded in your subconscious. So market profile right now is just in the consolidation. What it's doing when it's in consolidation is just taking out liquidity on both sides of the market. It's dropping down, taking out sell side liquidity. For example, back here, it dropped down, took out sell side liquidity. It rallies up, takes out buy side liquidity. Say right there, buy side liquidity. So above old highs, below old lows, buy side, sell side liquidity. Y'all should understand that. Also, we're ranging inside of a weekly fair value gap. So let me highlight the weekly fair value gap. Matter of fact, for the people that's new and the people that's been here, y'all tell me what this is right here. What is this candle right here? In the blue fair value gap is the higher time frame fair value gap. But what is this right here? Y'all remember what this is? I haven't removed it from my charts, even though I got it hidden right now. But what level is this right here on the weekly time frame? What is this? There you go. For the people in the back and the people that are brand new, it's called a BISI. Shout out to you, Daryl. Always in the front, always on the front row of the classroom. Always on the front row. Shout out to you, Daryl, and Lawrence and several other and Hi-Fi. Y'all are always on the front row, and I appreciate that. So for the people in the back that just be watching, y'all might want to come up a little bit to the front of the classroom and pay attention, because again, this is an educational channel, and I tell people all the time, I'm going to be charging for this at some point, but for the longest, I've been giving it to y'all for free. So it's a BISI. It's a weekly fair value gap. So let me highlight it. Boom, just like that. It's a weekly fair value gap. you can see how the market has been trading down inside of it. If you wanted to set limit orders, right now, I wouldn't set that limit order because I'm monitoring that 3-month close. So there's a possibility that we could come lower. That's because I'm analyzing the market from a higher time frame. I'm doing a top-down analysis. So that's exactly what I'm highlighting right here. This is a BISI. I take a Fibonacci, I lay it on the high of the fair value gap down to the low. You can see how, let me clean this up a little bit. Let me remove that. And there's a lot of things going on at once as well. And the analysis that I teach y'all, everybody is going to see something different, and that's okay. But when I'm blending all these concepts together, it's just adding on top of more confirmation. It's making it more valid that, okay, the market most likely wants to do this. So you might see one PD array. PD array stand for premium discount arrays. You might see one PD array. And somebody else might see another one, but they all are there in the market, and one might resonate with you. Somebody might like the fair value gap. People might like the BISI. Some people might like the wicks. Some people might like to use the order blocks. Some people might like to use the inversion gaps. Some people might just like to trade liquidity pools. Whatever you see, let it resonate with you. Because I've thrown so much at y'all. And what I'm doing, I'm using it all. Me personally, I'm a universal trader. I'm using it all. So you can see us in the past couple weeks, we trade down into this weekly fair value gap that is also blending with the monthly fair value gap in blue. Trade down to discount. You want to be a buyer at discount. You want to buy the market when it goes down. You want to be a seller at premium. And what we're doing, we're just ranging back and forth. So what I want to do right now, let's go ahead and ask the chat, what side of the market, the current candle, which side of the market do y'all currently see price reaching for? What side of the market? Is it going to want to come up and take out the previous week's high, or come back down to discount and take out the previous week's low? What side of the market? Or do y'all see it ranging, having an inside range week? What do y'all see? So Daryl, you said previous week's low. Ike, you said previous week's high. You're saying up. Lawrence, you say you think it's going to range. Some of y'all saying ranging. Okay, so y'all saying we're going to consolidate. So, but remember, yes, we have weeks or days that the market likes to range sideways. You can anticipate that. But I'm always going to be on the side of seeking liquidity. If we have a day or a week that just ranges and it doesn't take out the previous week's high or low, that's okay. I was just wrong that week. And when you're analyzing the market, you're not always going to be 100% right or correct. You're going to get it wrong. But I'm always going to be on the side of seeking liquidity. So I'm going to go ahead and say we're going to come up and take out the previous week's high at minimum. And if we get really crazy, we could come back up into this inversion fair value gap right here. At least at minimum, the low. You know why? Because we have a lot of liquidity on lower time frames resting above the market. We have a lot of liquidity resting above the market on lower time frames. So we all know that every week has 7 trading days. So what I'm about to do now is I'm about to zoom in on the market. I'm about to go down to the daily time frame. Go down to the daily. And the daily time frame is the last stop before we go intraday. So all the monthly, the 3-month, the monthly, the weekly, the daily are all long-term investing charts. So if you want to be a long-term investor, you want to be a swing trader that want to hold a position for several weeks or whatever, several days at a time, you want to view the market from a 3-month, monthly, weekly, and daily. Anything below the daily time frame is you're now going into intra-week, intraday territory where you're looking for short-term opportunities. So just keep that in mind. So this is the first time I done come to the charts today. You can see on the daily time frame, you can see that consolidation. On the daily time frame, each one of these candles take 24 hours. So there's only 24 hours in a day. The crypto market is a 24-hour market. So 24 hours. Let's throw up that weekly ghost pool right quick. right there. So what I just highlighted was that weekly ghost pool, that Fibonacci right here. This is on the weekly time frame. So you can see us drop down inside of it, and it's touching multiple things. It's touching that weekly fair value gap. It's touching the ghost pools that are hidden in the market. It's also dropping down into this monthly fair value gap. And as you can see how the market last week on Sunday, it dropped down. Monday, it drops down to discount. Smart money accumulates. It also takes out liquidity. And then the market has displaced higher back up to the premium. Do y'all think it's random that the market just rallies higher on Saturday? It stops directly at that level right there. You see that? Do y'all think that's random? Hold on, I done messed it up. Let me bring that back up. I done messed it up. Readjust it. I'm gonna drop back down to the daily time frame. And when the market is consolidating like it is, this is the most difficult market to analyze unless you got experience. So what it's doing is it's waiting for that quarterly close. So that's what I'm trying to tell y'all. It's waiting for that quarterly close. That's why it's just consolidating like this. We're waiting for Q2 2025. So that's what I'm waiting for. In the meantime, if you're a long-term investor, all you can do is wait. All you can do is sit on the sideline and wait. You can't do nothing but hold your position. But what I'm about to start doing is we're going to start looking at going down to lower time frames. Shout out to you, Law Docs. You said, please don't charge. I'm barely hanging it on right now. Well, hey, if you just joining, let me go ahead and do my shameless plug or whatever. Let me go ahead and do this. Let me go ahead and pull this up. If you're just joining, I'm currently working on it. I just completed some videos last night. It's taking some time. But if you're just joining, I got a Patreon coming. And for the people that barely can keep up right now, and I'm not expecting you, if you're brand new to my channel, you're not going to keep up to what I'm talking about. But I have a Patreon. It's not available to the public yet. I will announce it on my channel when it's available. But again, I got different tiers. For example, I got a beginner tier for people who want to learn this from a ground level. If you have no idea on how to analyze these markets, I give you step-by-step analysis on how to start from the basics. So that's what I'm currently working on. And then I got more advanced stuff coming in the future. So more advanced stuff coming in the future. But if you're brand new and you can't keep up, everything that I've been doing in my live streams has been for free. And you should be going back, watching the live streams, going back, taking notes, watching the videos. And over time, I got people in my live stream. I got testimonies of people understanding. So when I'm asking my community or I'm asking the chat, what is this? What is this right here? And they respond. That's because people have been listening and coming and showing up consistently. So that's all I ask right now. I'm not charging nothing right now, but if you just show up every day and be consistent, you're going to catch on. So that's unfortunate. But blessings to you, Law Docs. Blessings to you. So back to XRP. So a lot of y'all long-term investors, all you can do, you're stuck right now. You just got to go through the time and the pain and the headlines and the news every day. You really don't. All you can do is sit there and complain or just have patience, just a lot of wisdom and patience. That's all you can do, because what else can you do with these markets? So what I'm about to show you is how to drop down intraday. And if you know how to leverage trade, you go to a certain platform, the skill set. We're going to go to lower time frames and go to lower time frames, and I'm gonna show you opportunities that are present right now. So this is a daily time frame. Let me hide this right quick. So the weekly bias. I already asked y'all what the weekly bias. Where do y'all see price action going this week? And a lot of y'all told me higher. A lot of y'all told me nowhere. Also, keep in mind the economic calendar. We have a lot of high impact news in the week. FOMC meetings, federal funds rates, etc. So we got a lot of high impact news coming to the market this week. So expect the market to be volatile this week. But where do you want to start? Y'all told me. All right, for example, let's go out to the weekly. Go out to the weekly time frame. On the weekly time frame, And let me clean up some of this. Let me hide some of this. Let's get straight to the basics to make it even clear. I don't want to distract you with all these price levels. Let's say you know how to day trade. Let's say you're just savvy like me and you want to learn how to day trade because you don't have time to be waiting for Q2 next month or Q3, Q4 and years out. You don't have time to be waiting. You want some opportunities right now. How do you start that analysis? You start on a weekly time frame. This is for people who want to get in and get out the market short term. First thing you want to do is identify last week's high and low. So right there, that high right there, that was last week's buy side liquidity. And clearly down here, last week's low, sell side liquidity. So currently, after dropping down the discount, which was this weekly fair value gap right here that I just removed, it dropped down the discount. Also, the wick. We're using this wick as a support level. It's a discount wick. So if you're ever looking at wicks, the wick low, that's a discount. The wick high, that's a premium. So we drop down into this wick low, which is a discount. Smart money accumulates, and you can start seeing the market wanting to go higher like it is right now. The minimum objective right now so far is this high right here, last week's high. So I'm going to put a target on that. Boom, right here. And y'all stay tuned because I'm going to go over the different assets here in a minute. But this is the part of the live stream where I'm teaching and you should want to pick up this information. So let me highlight that right quick. So I asked y'all what side of the market y'all want to go to. I told y'all I'm looking for this high right here to be taken out. So what I'm gonna do now is let's drop down to the daily. Remember, on the weekly time frame, each one of those candles takes 7 days. So when we drop down to lower time frames, we just began the new week, Sunday right here. It's already Monday in Asia. This candle right here starts the new week of trading. What have we done so far? We retraced down to where? We got an inversion fair value gap right here. Inversion fair value gap. Let me see if I can highlight that. Right there. So we got two inversion gaps. So this is the daily fair value gaps. Again, I already know what the higher time frame is doing. We dropped down, we dropped down the discount. We took out old low right here, sell side liquidity. We liquidate that low. Below that low, there's pending orders, which are buy orders. Let me highlight that low. That low right there. Do you think it's random that it drops down to that low and then reverses on a dime? It's not random because if you've been here, you've been watching. The market drops down to that low, scoops up buy orders. It displaces higher. We trade through the inversion fair value gaps. Remember, gaps, SIBIs or BISIs, you do not get rid of them because we can cut through them. So keep that in mind. If you see a SIBI like up here, you can see how the market goes up there, rejects, and comes back down to the inversion. This gap right here was a BISI. This gap right here was a SIBI, and they both became inversion fair value gaps. So you could see us trade up into this SIBI. We reject it cleanly. It's not random. We reject that level cleanly, close, and then this candle right here opens, and these are daily candles. And then it sells off, goes back down to what? Discount. So what did I tell y'all? The market always goes from a premium, which is right here, down to discount. You want to be a seller at premium. You want to be a buyer at discount. And the market is in a consolidation on the higher time frame. So hopefully y'all understand that. Maybe I need to make it a little bit more visual for you. I'm going to write premium. Right here. The market was at a premium. And then I'm going to, let's clone that. And I'm going to say discount. So you want to be a buyer at premium. You want to be a seller at premium. You want to be a buyer at discount. Go up to premiums. Now, when I drop down to lower time frames, you're going to start seeing it more clearly. So keep that in mind. And then we also got some other gaps. But what I'm going to do right now, I'm going to clean it up a little bit so it doesn't confuse you. I don't want all this stuff on my chart, but I'm aware of all these levels. And it's getting real congested because of the consolidation going on in the market. But all these levels are key. So from the daily time frame, I'm gonna ask y'all this question. After dropping down to discount, remember you want to be a buyer at discount. After the price drops down to discount, which is this inversion fair value gap, what side of the market do you see this daily candle? Is it going to want to come up for the previous day's high or the previous day's low? What side of the market do y'all see it coming back down to? Or what side of the market do you see price reaching for? That's what I need to say. What side of the market do y'all see price reaching for? Does it want to come back after leaving discount? Does it want to come back up to premium and take out what? Previous day's high? You see this high right here? Or come down and take out the previous day's low? Shout out to y'all. Hopefully I'm explaining this well. I'm still learning how to articulate myself when it comes to these markets because it is a code that I'm speaking in. It is a code. So y'all saying premium. One thing that I noticed right here, look at this right here. I didn't analyze this right here. Y'all see this? What is this right here? What is this? Small Bissy. Shout out to you, Daryl. Always in the front of the classroom. Shout out to you. I love the students that are in front of the classroom. It's a small little Bissy. So that's a little level that it's already an inversion. It's a Bissy that we cut through. So we traded through it. But right now, as I drop down to lower time frames, possibility that we want to come up and reach for that level right there. So now remember, I'm still on the daily time frame. Still on the daily time frame. Still on the daily time frame. So again, price is always going to want to see liquidity. Previous days high, previous days low, or inefficiencies in the market. SIBIs, BISIs, inversions. So let me read this comment. Law Docs, if you could mention price on premium and price on discount, it would be helpful in my opinion. Continue to watch. If you're brand new, it's going to take you some time. Continue to watch. So what I'm about to do is just go down intraday. Go down to the hourly time frame. So anything below the daily time frame, you're no longer looking at the market from a high time frame perspective. You're no longer looking at the market from a high time frame perspective. Let me clean some of this up. Clean some of it up. And what I'm going to do now is drop out. I'm going to bring out my weekly divider. So anytime you're going out to the lower time frames, I start on the weekly time frame and then I throw up these weekly dividers. And we are watching live price action. Price is live currently. Again, you can see the premium levels above the market. You can see the discount level below the market. You can see small displacement. So let me zoom out right quick. So when I apply these vertical trend lines, I'm outlining the weekly ranges. So if you look at that weekly time frame, the weekly candle, when you zoom in on the weekly candle, this is what it looks like on lower time frames, on the hourly time frame. So we all know that there's 7 days in a week, as far as in the crypto market. And as I drop down into lower time frames, you can individually see each trading day that happened on the hourly time frame. If you don't understand it, go back and watch the live stream. So first thing I do is, y'all tell me in the comments, what's the first thing I do when I drop down to lower time frames and I want to view the market from an intra-week perspective? What's the first thing that I do? Who remembers? What's the first thing that I do? What's the first thing that I do? Who remembers? It's very simple. It's repetitive. I do this every week. It does not stop. The markets are algorithmic. Shout out to you, Lenny. Shout out to y'all. Shout out to everybody that be in the front of the classroom paying attention. Shout out to you, Scott. Shout out to you, Jay Mason. Shout out to you, Sneaky. We're marking out the liquidity. We're looking for previous week's highs, previous week's lows. So right there, when I was on the weekly time frame, this high right here, I outlined it. It was simple. From the weekly time frame, I drew out the buy side liquidity from last week's high and the sell side liquidity from last week's low. As you can see, we got a lot of liquidity building up below the market. So what I want to do now is, let's go ahead and look, there goes my target that I outlined. I said, hey, I want to see the market come up and take out the previous week's high. And also we got those inversion gaps below the market at discount, and above the market at premium. So you can see how the market drops down, and I just messed up. Let me go back out to the daily. 1 second. You got to be careful. Sometimes TradingView is real sensitive, and you can throw off your PD array. So let me go back out to the daily. I'm gonna highlight that gap right there. And if y'all just joining, make sure y'all hit that like button, subscribe if you're brand new to the channel. I definitely appreciate y'all joining. This is what y'all came to see. I definitely appreciate it. Got 45 people in the building. Shout out to y'all. So from the daily back down to the hourly, you can see what the market is reaching for currently. Now what I want to do is let's throw up my daily dividers. So just like I threw up the weekly dividers, I'm gonna throw up my daily dividers. They help to assist me in looking at the daily ranges. So right now on the hourly time frame, I'm looking at the weekly ranges. But on the daily time frame, when I throw up my daily dividers, I'm gonna look at the daily ranges. So here's each individual day. So right now it is currently Sunday in the United States. It is currently 8:56 Sunday, 8:56 Sunday. It is also the Asia session. So the Asia session goes from 8 o'clock p.m., 12 o'clock midnight. And wherever you're at in the world, you need to adjust your time frames, your clocks. Whenever you're analyzing these markets, you need to be adjusted to New York Eastern Standard Time. New York Eastern Standard Time. So adjust your clocks. I already got marked out the sell side liquidity from previous days last week. So when I'm on this, when I'm throwing up my daily dividers, what am I trying to do? Y'all tell me in the comments. What am I doing? When I view the market from this perspective and I'm throwing up my daily dividers, how am I viewing the market? What should I be identifying? Shout out to you. Oh, y'all haven't said it yet. Y'all haven't said it yet. There y'all go. I'm looking for the liquidity on lower time frame. So like I said, when I was on that weekly time frame, when you're on the monthly, weekly, daily, you can't see all the liquidity in the market. You can't see all the individual liquidity in the market. Not previous weeks. We already did the previous weeks. Now watch this. Let me go down to the 15-minute. So from the hourly time frame. So pay attention, y'all. Pay attention. Every time frame has its own unique perspective when you come to analyze the market. Each time frame, when I'm viewing the market, every time frame, I'm viewing it from a specific perspective. So on the hourly time frame, I'm looking at the weekly ranges. I'm looking back at least 1, 2, 3, 4 weeks, sometimes more. And when you can't see it all the way, you need to drop out to the 4-hour. Remember, anything below the daily time frame, intraday price action. So when I'm on the 4-hour time frame, I can see all the liquidity that they left behind in the market from weeks ago. So right now, when I'm looking at the weekly ranges and looking at intra-week price action, I currently have 1, 2, 3, 4, 5, 6, 7, 8, 9 weeks of price action. 9 weeks of price action that the market makers have left their pending orders in the market. Remember, if you've been watching my live streams and been consistent with me, I have not removed none of the buy side liquidity that they left behind in the market. So if the market always sees liquidity, what do y'all think is coming? What do y'all think is coming eventually? What side of the market do y'all see the market makers going to attack? Listen, all this time, all this consolidation currently in the market is to get retail traders and investors up out the market. A lot of y'all have been chasing the price. Like I said earlier, a lot of y'all investors have been chasing price as the market goes higher. Y'all are buying at $2.96. You're buying the market at $3, $3.30, $2.70, $2.21, $2.50. And if you was just throwing money into this asset, you have seen it go lower, all the way down to roughly $1.90. So you're underwater. You're waiting for either you're going to sell or you're going to wait for price to come back up to make you break even, bring you back to break even. Y'all got to admit, y'all make some admissions. Who has done that? Who just buys price? Who buys an asset or XRP at random prices? Y'all gotta let me know. But that's what's been going on. This whole profile, which is a script, the markets are algorithmic, this consolidation that we have been enduring for close to 9 weeks. I'm gonna go back 1, 2, 3, 4, 5, 6, 7, 8, roughly around 8 weeks. The market has sold off and consolidated. And you long-term investors is wearing on y'all. I already know. Sneaky, you said it used to be you. Ed, you said you're guilty of it. It's okay to be honest. High is where all the liquidity is. My last pickup was $1.89. Shout out to you, low docs. You bought it at a discount. But a large majority of people, especially in here right now, y'all been buying at premiums. You want to be a buyer of the market at a discount. Now, and that's based on the higher time frame. But what I'm about to show y'all right now is how to get in sync with the market. So from discount, look how the market is behaving currently. Dropping down the discount, and it's reaching for liquidity above the market. So let's go back down to the hourly. You said Alicia before you came across my channel. That's why I'm here. I gotta be a light in this dark world. I'm trying to be a light for some of y'all. You know what I'm saying? I'm not here to get over on y'all. Cause you know why? I know this skill set, and I know like 99% of investors and traders don't know what I know. I'm like in the 1% of this information. So y'all have been witnessing it as well. Just like I called gold going to $3,000 in March 2 weeks ago. And then yesterday I see all the headlines from mainstream media calling, oh, gold, you know, they're breaking the news, but it already happened. After gold breaks 3,000, they wasn't trying to let y'all know beforehand. They wait until gold breaks $3,000 to inform the public. But 2 weeks ago, I'm already telling y'all, oh, in March it's going to break $3,000. So let's go ahead and focus on current price action. On the hourly time frame, let's go down to the 15-minute. And we're just currently looking at what has happened today. Above old highs and below old lows, that's sell side liquidity. This high right here, this swing high, this was the high from the lunch hour, the New York lunch hour. So we're pretty much going to see price drop into this level right here shortly. So that's buy side liquidity. So do you think it's random? Let me highlight this right quick. This swing high, this was from the New York AM session. And what we're doing right now, this was today. So we're intraday. We're looking at the price action in the volatility from today, Sunday, March the 16th. So during the New York lunch session at 12 o'clock, price went up, made a swing high. Do you think it's random that the market went directly up to the midway point of the daily fair value gap? Do y'all think it's random? The daily fair value gap, and reject it and sell off. Think that's random? And in doing so, they left behind buy side liquidity. There's pending orders at that price level right there. Pending orders. Also, let me give it that blue color. Also, we got sell side liquidity, which most likely is the low of the day. So the low of the day for the trading day is right here, sell side liquidity. That formed during the New York AM session. So what I'm showing y'all is where the pending orders are in the market. Retail does not know about this. The average retail investor has no idea about where the orders are in the market. And here I am showing you that here's the orders in the market. So it's also, we're inside of a macro as well. So it's 9:04. The macro is about to complete. You can see where the market is reaching for. It's reaching for liquidity. Also, look at this large wick over here. I'm looking at this wick. I'm going to highlight that on the 15-minute time frame. So let me highlight it. Y'all see that? We use wicks. So as I draw that wick higher, let me even it out. So as I draw that wick out, which is the ghost pools, do you think it's random that price randomly goes to the midway point of that and rejects it? Come on now. Y'all tell me, tell me if that's random. Tell me if that's random. Tell me if that's random. If you're just joining or you kind of confused, we're looking at price action right now. I'm showing y'all how to find opportunities as a day trader, not a long-term investor. But if you follow me from the beginning up until now, I walked you down through a long-term investor's perspective all the way down to what's going on right now. Where's the opportunities right now in the market? So I'm helping traders and investors to blend the two. So look how the market is retracing. Do y'all think it goes randomly to the 0.5 level, which is the midway point, and reject? Do y'all think that's random? But again, on higher time frames, we're seeking that liquidity. So let me go ahead and remove that. I'm already knowing that subconsciously in my mind. I'm looking at these levels that you're probably not aware of. So I'm gonna hide that. I'm gonna hide that right there. We're inside of a ghost pool. We have liquidity, which are pending orders resting above the market. So what I want to do now is, we got 5 minutes as well to end that macro. This is a 15-minute time frame. So let me go ahead and show you what the Asia session looks like. So from 8 o'clock p.m., 12 o'clock midnight. And if y'all just joining, make sure y'all hit that like button. Shout out to my new subscribers. I appreciate y'all joining. Let me give it another color. Y'all should be taking notes. So this is Asia. I'm using this rectangle to show you the time of the day it is. It's the Asia session. It's pretty much a 4-hour session. And let me throw up some vertical trend lines. So my focus is on this window in time. This window in time. See, Asia. Bring it up some. It's a window in time. So you don't just come in the market at any time of the day. You want to be in the market at specific times of the day. So within this window of time, what's the one thing that y'all see? Y'all tell me in the comments. Within this window of time, what's the one thing that y'all see? It could be anything. Describe what y'all see within this window of time that I'm highlighting during the Asia session. Asia session goes from 8 o'clock, 12 o'clock midnight. What's one thing that y'all see? If you look at the bottom of the screen, it shows you with these vertical trend lines, 8 o'clock, 12 o'clock midnight. You see expansion? Y'all see expansion? Okay. Shout out to y'all. Y'all identifying the profile within this window of time. Shout out to you, Scott. Like I said, y'all all gonna see different things, but it's whatever is there for you to see. Multiple fair value gaps. So within this window of time, y'all telling me, okay, shout out to y'all. And guess what? All of y'all are correct. All of y'all are correct. So let's go ahead and highlight. Y'all already identified the market profile. It's an expansion. Let's go ahead and highlight the fair value gaps that we see in the market. So right there, that is a 15-minute BISI. 15-minute BISI. We also have one down here as well. So let me remove this. And what I'm gonna do is I'm going to remove the daily fair value gap. Remember, the higher time frame draws price. The higher time frame pulls price towards it. So whatever those PD arrays on the higher time frame, that's what price is reaching for. So there goes a 15-minute BISI. And then I'm gonna clone it. There's one just below it. And what I need to do is monitor that 1 hour time frame. We just began the new hour. Here in 1 minute, that macro will complete. So I didn't really review the macro. I might catch the next one. So there we go. 2 15-minute candles. So what I want to do now is, let's go ahead and let me do this right quick. Clean this up real quick. So if y'all paying attention to what I'm doing, I'm framing out a trade setup. I'm framing the market out. I'm framing it up. So you see me highlighting where's the liquidity, where's the inefficiencies, and we work from there. We identify the market profile, and I'm framing up the market. Because if I can remove everything from my chart, if I zoom out here on the 15-minute time frame, there goes those higher time frame levels, and then let's say I drop out to the hourly. On the hourly time frame, and you keep zooming out, there goes those higher time frame levels, and go out to the 4 hour. On the 4 hour, there goes those higher time frame levels, and then you keep going out the daily. On the daily time frame. Well, on the daily time frame, y'all know we dropped down the discount, and y'all told me we're gonna reach for higher levels. Also, we got this small little SIBI right there. So let me highlight that. Let me bring that back up. And hopefully y'all are learning, because I didn't. Sometimes when I go live, I don't know where I don't know where I'm gonna take it. But I guess tonight is one of those nights where I'm pretty much teaching. So I'm just freestyling, to be honest. I'm not making nothing up. I'm just freestyling the direction of the live stream. That's what I mean. So again, you're getting a lot of insight that, hey, a lot of this stuff will be in my Patreon, and where, you know, it'll be catered to the Patreon. So here's another free session that I'm offering. So we got some minor liquidity right here. You see this high right here? Even on lower time frames, you don't want to ignore these highs and lows. That's a minor liquidity pool right there. You see the market goes up to that, liquidates that high. It's not as significant as the previous session highs and lows, the previous days highs and lows, previous weeks highs and lows. It's not as significant. Price is still going to want to reach for those higher time frame levels. See the daily fair value gap right here, daily inversion gap. And also we got the high right here from the New York lunch session earlier today. So we know there's liquidity resting above the market. But before we go up there, price took out this little minor buy side liquidity. So already you can see the market retracing after taking out liquidity. Let's go ahead and get in sync. So from the 15-minute, go down to the 5-minute. You see this large BISI right here, but price is going to want to draw for that 15-minute. So this is a 5-minute BISI, but price is going to want to draw for the higher time frame 15-minute BISI. So I'm going to ignore this and stick to the higher time frame gap. So from the 5-minute, let's go down to the 1-minute. On the 1-minute time frame, now that I know on the 15-minute prices want to retrace for that SIBI or that BISI right here, I can get in sync with selling the market. So from the 1-minute down to the 30-second. I bet some of y'all that brand new, you're probably not aware of the 30-second chart, but you can see order flow selling off. It's in a sell program. It's reaching for what? That discounted BISI highlighted in purple on the 15-minute time frame. Here in about 17 seconds, let's see if they want to trade up into this SIBI on the 30-second time frame. And we're trading, hypothetically, we will be trading down lower to discount, and we're going to see if we can find an opportunity to get long going higher. So boom, SIBI formed on the 30-second time frame. Market also low resistance. There's little retracement, there's little wicking, it's running smoothly. So little retracements. Low resistance liquidity conditions. We missed this one right here on the 30-second. So there was a SIBI up here, price traded up into it. That would have been a short opportunity to go down to discount. So look at that SIBI right there. SIBI, price trades up into it. You could set a limit order to short the market. It displaces lower. Where would be your exit? Where would you be getting in and out? Right here, boom. Top of that fair value gap on the 15-minute time frame. Top of that fair value gap. Let's watch it. Boom. See how it touches it and rejects it? Do y'all think it's random? Now, that doesn't mean we're not going to come any deeper, but that would, if you was to short the market, that's your exit right there, out the market. So now that we're currently coming into that 15-minute fair value gap, let's go ahead and drop out to the 15-minute. Now look on the 15-minute. What I just highlighted was how you could find shorting opportunities to get down a discount, but from the 15-minute time frame, which is the higher time frame, you're looking for a buy entry to get long. So now let's see what they want to do. Let me drop out to the hourly. We got 45 minutes on the hourly time frame. We also traded up into this SIBI on the hourly. This SIBI on the hourly. So let's go back down to the 15-minute. And what I'm going to do now is, because we're in the 9 o'clock hour, I'm going to draw a vertical trend line on the 9 o'clock hour. I'm going to give it a, let's give it a white color. So from 9 o'clock to 10 o'clock, 9 o'clock to 10 o'clock. That's what these two vertical trend lines represent. 9 o'clock to 10 o'clock. So within every hour, there are 4 quarters. Y'all should hear me say it before. Y'all tell me what. So every hour has 4 quarters. So right now it's 10 o'clock. We're in the 9 o'clock hour, Eastern Standard Time. It's currently 9:15. So from 9 o'clock to 9:15, that is the first quarter of the hour. From 9:15 to 9:30, that is the second quarter of the hour. From 9:30 to 9:45, that is the third quarter of the hour. And from 9:45 to 10 o'clock, that's the fourth quarter. So right now we're currently trading inside of a discount on a 15-minute time frame. And we just entered the second quarter of the hour. So let's go down to the 5-minute. Every 15 minutes, there will be at least one opportunity that presents itself to enter a trade. So keep that in mind. So look at the 15-minute fair value gap. Let me go back out to the 15-minute. What I'm gonna do is I'm gonna draw a Fibonacci. Draw a Fibonacci from the high of the fair value gap down to the low. Y'all should already know what this represents. I probably don't have to explain it to y'all at this point. Some of y'all, if you're brand new, just pay attention. So you can see us ranging inside of the gap. What I want to see is if the market wants to go up higher to take out the liquidity and draw to this inversion fair value gap, we're going to need institutional sponsorship. That means capital comes into the market and drives price higher in the opposite direction. So how do you identify that? You got to go down to lower time frames. You're going to pretty much want to see a reversal or a breaker, a bullish breaker. Shout out to you, Malcolm. You're going to want to see some type of bullish breaker as the market drops down to discount. That's a PD array as well. Let's go down to the 1 minute. So after dropping down to discount, I showed y'all how to get in sync after taking out buy side liquidity. You see that high right there? And then they displace lower. That's displacement. All the way down, back down to discount. And I showed you several opportunities that you could have took and did a quick scalp in the market. Scalp the market really quick. Get in and out. From this level down to this low, out the market, just like that. Now, let's see if we get displacement here in the second quarter of the hour. So let's go down to a 30-second time frame. See what they're doing on the 30-second. We're just consolidating. I want to see some type of displacement higher. And you're going to be able to identify a displacement. Like right now, you're going to start seeing consecutive candles going higher. And it's going to do it real fast and real rapidly. Make sure y'all hit that like button, subscribe if y'all brand new to the channel. And that's what I mean right there by displacement, you see? But let's see if they want to continue higher. This is a 30-second time frame. Here in 10 seconds, this candle will close. It comes back up into this inversion. And I probably need to drop out to the 1 minute. Let me go out to the 1 minute time frame, not the 1 month, the 1 minute. So on the 1 minute time frame, you don't want to get too caught on those lower time frames because you can get caught off guard. So you definitely got to pay attention to what's going on. So you see the market drop down to discount and it's trading currently up into this SIBI. Let me see what the 5 minute is talking about. On the 5 minute, it trades back up into this inversion fair value gap right here. So this gap right here, that was a BISI, but we traded through it. So let me highlight that right quick. That's a 5 minute inversion gap. So do you think it's random that the market trades back down or trades back up into this gap right here and goes towards the midway point and rejects it? And maybe I need to label it for y'all. Let me go ahead and label that. And if y'all just joining, make sure y'all hit that like button, subscribe if y'all brand new to the channel. Have y'all seen it like this before? Have y'all ever analyzed the markets? And what the type of analysis that I'm doing right now, this is for people that want short-term opportunities. I showed you how to be a long-term investor, but now I'm viewing the market from a short-term right now perspective. Like, where's the opportunity right now? How can I make money right now? So that's how I'm viewing it. I know this intrigues a lot of y'all as well. This is like intriguing. You say you're gonna send me eggs to be on the Patreon? That's crazy, man. I don't eat eggs. I don't eat eggs. So you see the market drop down to discount. It's just ranging at the 0.75 level. And then how you gonna send me eggs? And eggs are expensive. So how you affording eggs right now? How are you affording eggs? So I'm just still waiting. I'm still waiting. Let's see right quick. What I'm gonna do now is let's throw up the split screen. Let's throw up that split screen. So on the right side of my screen is gonna be the higher time frame. The left side of my screen, lower time frame. So over here on the right, I'm gonna go out to the hourly time frame. And again, we're just still consolidating. So what I'm gonna do now is I'm gonna highlight this SIBI right here. This is a 1 hour SIBI. So I'm gonna go ahead and highlight that. And we're just caught up in that right now, or we just rejected off of that. So that's a 1 hour SIBI. And now we're retracing. I'm gonna give it another color. Let's say light blue. Boom, like that. And as you can see, now that brings a different perspective to the analysis, because I didn't highlight that 1 hour. I seen it. I just was wanting the price to reach up for this daily fair value gap. But we trade up into it, we reject it. But we also traded inside this 15 minutes. So we're still trying to wait and see what we want to do. Not y'all holding chickens, man. Y'all holding chickens. Hey, I might can use some chickens though. I might can use some chickens. That is a hustle. That is a hustle. So, hey, ain't no shame over there. I might need to use some chickens. $30 for a dozen. Hey, y'all might be laughing at that. We might be coming to that. $30 for a dozen of eggs. Might be coming to that. At that point, you might as well just eat the chicken. Just eat the chicken. To hell with the eggs. So right now we're just ranging. Here in a few minutes, the second quarter of the hour will end, and we will cross over to 9:30, 9:45. So let's see what we want to do. Not y'all on my live stream talking about bartering. You said I would give you my XRP to be in this curve to run longs and shorts. Hey, that's an offer that I might have to take. Because again, like I said, these long and shorts that I'm showing you right now, this is intriguing to a lot of people. A lot of people want to learn this. And people are willing to pay XRP for this. That should let y'all know that been watching me, that been watching my analysis, watching me show you price action. You learn this skill set. And you might have people willing to pay you an XRP. You know what I'm saying? Learn the skill set. You said I have a small trading bag and you can help me make it into a bigger bag of XRP. I will make it all back. Well, law docs. And this is why I'm doing a signal service as well. It's not available right now. That's probably going to be the last thing that I implement, a signal service. It's definitely a high demand for a signal service. But right now, why not learn this information for free? And again, if y'all just joining, this has replay value. So if you ever feel like I can't grasp this, you can always go back and watch the replay. So look how we dropped down the discount. Might need a chicken membership. You crazy? I might have to consider that. I'm taking all donations. You got chickens, you got XRP, whatever you want to donate that I can get a profit off of. I might need to take that. What's up, DeAndre? Shout out to you. So you see we drop down to the 15-minute fair value gap and we trade back up into the 5-minute SIBI. So what I'm gonna do now is let me hide this blue 1 hour. Just know that it's there. Just know that it's there. I definitely appreciate y'all joining. We're just kicking it. It is currently 9:26. Here in 4 minutes, we will start the third quarter of the hour. So what I'm gonna do now is drop down to the 1 minute. Go down to the 1 minute. Still consolidating. I need to see displacement higher. I need to start seeing that displacement. I want to get into the other assets, but right now we're just studying price action right now. And pretty much if y'all been watching me the past few days, nothing has changed as far as the overall market. So that's why I'm pretty much showing y'all live price action, how to analyze the market right now. If you watched me yesterday, I did a good analysis on the other digital assets. So if you want to go back and watch that one, you can. It wasn't a long one, but that's pretty much what I outlined yesterday. And we're just consolidating. Look at this candle right here. We already took out the last hour over here on the right side of my screen. We took out the previous hour's high. That was that buy side liquidity that I outlined. And after taking out that high, now we're just kind of retracing lower. But if we want to potentially go lower, well, we're rejecting the SIBI. Let me go out to the daily again. Let's go out to the daily. Also, it's Sunday as well. So the beginning of the week, Sundays are typically not volatile days. We also got a lot of liquidity building up below the market over here on the right. What's up, New Mindset? Appreciate you joining. And if you're just chilling with me, y'all haven't subscribed, help me get to my 1,000 subscribers. I don't think YouTube wants me to be detailing this information. I ain't gonna lie. YouTube does not want me to detail it, because who else have y'all seen it in the crypto, especially in the XRP space, or who else in the XRP community, which I'm not a part of no community. I'm a trader before I even came to crypto. So I was a trader first. But who else in the community has or outlines price action like this, who is showing you how to analyze the markets? Or in crypto in general, a lot of it be hype. A lot of it be like, hype shit. So who else is out here teaching y'all how to analyze these markets properly and showing you what's going on with details? I'm utilizing this platform for educational purposes. I miss YouTube. Like, who was in crypto back around 2016, 2017, 2018, when people was out there actually educating, informing people, and then the pandemic hit and everybody went just fucking chasing views. You know what I'm saying? Everybody was trying to chase views. Everybody trying to get clicks. People trying to sell you stuff. I miss YouTube when it was just purely educational. Everybody was on there educating and enlightening people. So I decided to go this route to do educational services for people out here in the who would like to invest and who else wants to take their investing to the next level as far as learning day trading concepts, smart money concepts. Yeah, y'all remember the good old days in crypto where it was just like, I ain't gonna say good old days because those days were kind of rough too as well. It was a lot of bullshit, but I remember back in those times I was soaking up as much as I could. I remember reading IPOs, not knowing what the hell an IPO was, and also trying to look at all these different crypto companies and shit. You know what I'm saying? I remember those days. So it looks like we kind of want to see displacement. Let's see if we want to get that displacement. Again, the market just ranging at minimum. So right now at minimum, right now in the moment, I want to see market come back up to this daily over here on the right. This is the daily time frame. The bottom of this fair value gap, and also come up and take out the liquidity right here. That's around 234. So what I want to see right now is the market come up, leave the discount, come up to this daily inversion fair value gap and take out the liquidity from the lunch session earlier today. So that's what I want to see. We just started the third quarter of the hour. So from 9:30, 9:45, that's the third quarter of the current hour. So let's see what we want to do. I want to see us blow through this 5-minute inversion fair value gap and start going higher. Y'all give me a minute. I'll be right back. All right, y'all, I'm back. Claw, you said YouTube is the powers that be that don't want us to learn this skill set. I agree, man, because it's not like I'm looking for views or whatever, but I'm participating just like anybody else on YouTube. They're you know, it gets fun, it gets interesting. Like, and I suggest everybody, if you have any type of skill set or anything to offer, start your YouTube channel because it gives you exposure. And I'd say anybody need to start one. If you got Instagram, Facebook, Twitter, or X, start your YouTube channel. TikTok, start your YouTube channel. because it gives you exposure, especially if you got a skill set that you can offer to people. What I'm about to say. Oh, let me zoom in right quick. Let me zoom in. I see a 1 minute fair value gap forming. We just dropped down to it, and we're in the upper range of that 5 minute inversion fair value gap. So highlight that right there and see if we get displacement higher. It's a 1 minute fair value gap. But yeah, what I was saying was, you know, YouTube don't want the real, the real stuff out there. And I'm not looking to have millions of subscribers or none of that. You know what I'm saying? I just want people that want to learn this skill set, and I'm actually offering value. So I think me offering real value, most of YouTube is entertainment. Most of YouTube is entertainment, but how many people are showing you, like if you go watch a mechanic, he's going to show you how to change a tire. He's going to show you how to replace an engine, a motor. And some parts of YouTube is just, still like that. But when it comes to the financial industry, it's not a whole lot of information out there dealing with this. Again, most of y'all might follow people who like to look how the market dropped down to that fair value gap right there. Say I retrace it down to that gap, displacement higher. Now let's cut, go higher. Let's cut up, go higher. But yeah, a lot of people, when it comes to technical analysis, there's not a lot of people that's showing you how to analyze these markets in the fashion that I'm doing it live and actually telling y'all what's going on in the markets. But guess what? I ain't tripping though. I'm not tripping. $9:37 p.m. 9:45. We're going to the fourth quarter of the hour. So let's see what we want to do. It's already showing signs of displacement. So what y'all seen just now so far, y'all see that displacement. We're also trading back up into that 1 hour fair value gap. So keep that in mind as well. We're inside of that 1 hour fair value gap. So let me re-highlight it. Again, just trading inside of that, the blue area, that's on the hourly time frame. Who is Keenan? First of all, new mindset. Let me tell you something. I don't follow nobody else's analysis. If anybody's doing technical analysis on YouTube, I don't follow nobody else's analysis. I do my own analysis. So because of the things that I know, it really pains me to watch other people who don't come from the same school of thought or the same type of stuff that I know. Like it pains me to watch other people do analysis because I'm like, they don't know what the fuck they talking about. That's just me personally. Again, who else can do it live, show you real time, break down the market like, hey, this is where it's going to go next. Who else is doing that? Now there's people out there doing it, but who else is doing it like I'm showing you right now in this crypto universe? I pretty much walked y'all down. If y'all just, at the end of this live stream, go back and watch this live stream. I'm walking you down step by step how to frame up a trade, how to frame up the market to determine, okay, this is a discount, it's going to a premium. I showed you long-term all the way down to right now in the moment. This is live price action. This is not delayed information. This is not delayed data. You're watching it real time. So, and I'm not bragging. I'm just confident in what I know. So me watching somebody else, you know what I'm saying? I don't watch other people. That's just me. Because once you learn this skill set, trading and technical analysis is a personalized skill set. You don't share it. Listen, y'all don't share your analysis with other people, which I'm doing that right now. But you don't, when you learn this skill set, there's no need to share with other people. There's no need to take other people's ideas. You need to hone in on what you know and how do you need to become better. So it's a lone wolf industry. Technical analysis and day trading is lone wolf. I'm not looking over my shoulder. I'm looking to my left or my right saying, I wonder what this person is doing in their analysis. How can I get better than them? I'm not doing that. Just like when I tell y'all, I give y'all multiple concepts to use, and I tell y'all, everybody is not going to see the same thing. And I ask my chat, hey, what is this? And y'all say multiple, everybody doesn't have the same, they don't say the same thing. Everybody has a different view on the market. Everybody has a different view on the market, and that's okay. It's supposed to be like that. So we're just ranging, just holding. We're dropping that back down to this midway point of that inversion fair value gap on the 5 minute. Again, let me remove the hourly. I just had to bring that up to show y'all what's going on the hourly. And if y'all just hanging out over here, you haven't subscribed yet, make sure y'all hit that subscribe button. I'm waiting for the market to go up and take out the buy side liquidity. I want to do it live. Watching it live, you can't, doing it live. So I'm waiting. Again, here in 4 minutes, we will go into the fourth quarter of the current hour. So we're just waiting. I definitely appreciate y'all joining the live stream this evening, watching current price action. This is what majority of y'all come here for. I did do some fundamental reviews and reactions in the beginning of the live stream. So if you missed that, you might want to go back and catch that. Go to the 5 minute. 5 minute time frame. It's still ranging inside of this inversion on the 5 minute. Remember that pink shaded rectangle, that's the 5 minute inversion gap. Below the market, the purple highlighted area, that is the 15 minute BISI. So let's go back out to the 15 minute. So far on the 15 minute, y'all see the retracement down to discount. Let me remove this. So you watched this live. I highlighted this 15 minute BISI. I showed you how you could scalp the market down to discount and then get in sync with it, be a buyer to go back up to premium. You already see where I'm reaching for. This is what I'm seeking for above the market. This blue trend line, which is also resting at the midway point of the daily fair value gap. This green highlighted area, that's a daily fair value gap. This high was the high, the lunch hour high. So there was a lunch session. That's the high from the lunch session. So again, showing you live price action, showing you real time. Remember the highlighted area, the yellow, this is representing the Asia session, 8 o'clock p.m., 12 o'clock midnight. So we're inside of the Asia session. So let's go back down to the 5 minute. Starting to see displacement. We're starting to get that move higher. We just traded. This is an inversion, and there's also another fair value gap, a BISI. And now this is what I want to see. We're going to start seeing displacement. 1 minute time frame right here. You want to see some minor side liquidity be broken? Look at this high right here. That swing high, that's a minor buy side liquidity. And hopefully y'all learned something today. What's something that y'all have picked up so far today? Y'all tell me in the comments, like, what's fascinating to y'all? What's something that y'all have picked up that you find intriguing? What style of trader? Do you want to still be an investor? There's nothing wrong with being a long-term investor. Do you want to be a trader like I'm showing you right now? What's something that is intriguing to y'all? Or do y'all just want me to give y'all the handout? Some of y'all just want me to give you that handout. What do y'all like? What form of trading do you like? Do you like, check it out. I'm gonna ask y'all in the comments, what's this right here? When the market sold down right here, what is that? I have told y'all that in the past. What is that right there? What is that right there? Ike, are you saying you like the 15-minute time frame? Like, is the 1 minute too much for you? Or do you like to remain on that 15-minute and watch price action from that level? Okay, the comments coming in fast. I'm gonna get to y'all comments. So look how the market is displacing higher. I'm gonna come back to the comments here shortly. Shout out to you, Daryl. Sell program. So I showed y'all how to trade lower down into the market in the sell program. And then, okay, now that y'all know it's a sell program, we drop down the discount. Now what is the market in right now? Now, Ike, I'm gonna come back to your question here in a minute. I overread it. I'm just looking at current price action right quick. There y'all go, buy program. So I showed y'all sell program, down the discount, buy program. Now we're reaching for exactly what I was telling y'all. You know what I'm saying? Like, come on now. Reaching for premium. We buy at discount. We sell at premium. Look how fast the market. And also, we just entered the fourth quarter of the hour. So within this hour, we showed you how the market goes down to discount. And now it's coming up to premium, where I'm looking to get out at this liquidity pool, which is the midway point of the fair value gap on the daily time frame. So Ike, let me come back to your question right quick. Ike, are you saying that you like the 15-minute model, and do you want to remain on the 15-minute, or do you would like to drop below the 15-minute like I am on the 1 minute? So for example, let's go back out to the 15-minute. The 15-minute, every one of these candles take 15 minutes, and I highlight how, okay, form the buy side imbalance. Do you want to enter? Would you like to enter the trade right here, get in sync with price action, and then ride it higher up to premium? Or do you like when I go down lower time frames and show you how from the 15-minute down to the 5-minute, how the market wanted to retrace back down to discount, and I showed you the opportunity, and these opportunities come way faster. So I showed you how the market wants to sell right here, the SIBI, down to discount and get out the market. And what we did was we waited, and then we waited for displacement, and then boom, just like that. What is the market reaching for? You could have, if you wanted to be a quick scalper, you could have got out right here at this high. But no, we want to reach for that session liquidity above the market. Y'all watching this real time. High five. You said you learned that we all can look at the same chart and see something different, but it doesn't mean we all are all wrong. Correct, high five. Correct. You're definitely correct. That's what I be trying to preach to y'all. Ike, you said you like watching the 15-minute time frame more fair value gaps. For sure, Ike, for sure. Most definitely. Just know when you're on the 15-minute time frame, you're viewing the market from an intraday perspective. Look how the market just dropped down into this 1 minute fair value gap. Look at it. Look at that right there. You see that 1 minute fair value gap? It drops down, fills it in. It doesn't have to fill it in all the way, but it drops down. Now it's displacing higher. Let me read these comments. Jay Mason, you learned liquidity. Okay. Ike, you say you like entering on 15 minutes, but I can see the value in moving to lower time frames, no doubt. One of these days, I'm gonna live stream a live trading day. So one of these days when I get time, I'm gonna do a live trading day and show you money behind the trades. I'm not gonna do that yet though. I really don't want to do that because that's enticing. I don't want to do that to people. Show real money behind trades, because people are going to be in here trying to copy trade and they're going to get hurt because they don't know what they're doing. Daryl, I've done it in the past. Like when I first began live streaming, I was doing it when before I got up on camera. My first few live streams, I was live streaming live price action and I was putting money behind my trades. But right now, I'm not doing that at the current moment. I might save that for my Patreon. That's what I'm debating. Do it on YouTube or save it for the Patreon. So I might just save that for the Patreon. You said is that 235 on the high? Just slightly below it, 234. You can pretty much say 235. So look how the market is reaching for the liquidity. Again, if you just join it, you witnessed this all. I framed the market out. I gave you a foundation. I went from scratch. And if you just go back and watch what I was saying, I started on that weekly time frame. I said, hey, I think the market's going to go higher. It's going to want to reach for a previous week's low. And then I dropped down to the daily time frame. I noticed that we dropped down to discount and we was reaching for premium levels on the daily. So on the daily time frame, I said, hey, we're going to at least minimum take out the previous day's high. Let's go out to the 5 minute. And then I work my way down. I start working my way down to lower time frames. So let's say, for example, let's go ahead and clear some of this up. Let me go ahead and show y'all right quick. 234.48. Let me give you the specific level. And don't be trying to take a trade. If you're trying to do that, do not trade what I'm talking about. We've already had people in here gambling and they had to be removed from my live stream. Don't be trying to copy trade. Just pay attention. Learn the skill set before you try to put money behind the trade. That's just my disclaimer. So that high right there, that high is a price of 234.94. I don't have it calibrated, but right here, 234.94. Let me go ahead and calibrate it. 234.94. Okay, it's calibrated. So that's that high right there, 234.94. And what I like to do is let's go ahead and put some capital behind the trade. So we retrace down the discount on that 15-minute time frame and go out to the 15-minute. Right now, you're currently in profit if you was to take a trade on the 15-minute. So we was going to enter on the high of the fair value gap. Let's place our entry on the high. So boom, the high of the fair value gap. It gave you at least 3 opportunities to put in a buy opportunity. And then our stop loss is going to be at the low right here, the low of the fair value gap. That's if the price wanted to come back on you, you will have an insurance policy, which is your stop loss. And then next thing we want to do is let's go ahead and measure from the high of the fair value gap up to the liquidity pool above the market, which is at a premium. So I'm going to take a ruler. I'm going to measure from the high of the fair value gap up to the liquidity. That's a return of 1.18%. So if you had, let's say you had $250,000 right now, liquid, $250,000 liquid cash that you're using to put the work in the markets, trying to find opportunity short term. So 250,000 times 1.18%. Y'all tell me what that is. What is that? $250,000 times 1.18%. What will be your return? Law docs. Definitely don't be doing this on this strategy that I'm showing you. Do not use your spot XRP to do this strategy. This is for people who like to leverage trade, trade futures markets, trade leverage. Do not implement this strategy trading your digital asset, the token. You're new here, so I know you want to jump the gun, but do not do that because that's not what I'm demonstrating. Digital assets, the tokens that you buy from exchanges, you want to invest in that, put it in some type of cold wallet storage, and you want to hold that long term. As I'm looking at these day trading opportunities, this is for people who want to leverage trade, take capital, take cash, and put their cash to work. So do not do this with spot. Now, you're going to do what you want to do, but I'm just telling you, don't try this strategy with spot tokens. Do not do it. This is for people who want to leverage trade. So maybe you need to go sign up with an account to leverage trade. Learn how to leverage trade. Sign up with an exchange or a broker who allows leverage trading. So do not touch your digital assets. Again, like that's like me. You know what I'm saying? I'm being transparent. I'm gonna say that. Some people wouldn't give a damn. They wouldn't care if you risk your money at all. Dude, this is short term. Like I said, all this price action that I outlined has happened within 1 hour. It is 9:55. Also, we got a macro going on. Y'all should know what the macro is. From 9:50 to 10:10. That's a 20-minute window in time. That's a 20-minute window in time. We have just began the macro. We're retracing down. There's a 1-minute BISI that I'm about to highlight. So we're about to end the hour and we're about to begin a new hour. So right there, 1-minute BISI, buy side and balance, sell side inefficiency. We're retracing down to it. Now let's see if we can find support, go higher. We're also 9:50 to 10:10. That's the macro we're currently in. Go out to the 5-minute. So, okay, I'm going to ignore that 1-minute fair value gap because on the 5-minute, we have a larger 5-minute fair value gap. So I'm going to highlight that right there. Boom. Right there, 5-minute fair value gap. I'm going to highlight it in pink. And you can see right now what the market is doing or current price action is doing. It dropped down to the 5-minute. Trades down to it, rejects off the high. If you wanted to get long, hypothetically, in a trade, you set your limit order. But I wouldn't do it because it's not the beginning of the move. The beginning of the move was near the 15-minute fair value gap. But that's still an opportunity right there because, yeah, I want to reach for this high right here. But if I zoom out to the, go back out to the 1 hour. Was that previous day's high? No, that wasn't. On the 1 hour, I want to see the market come up to the high from Saturday. See that? So that was previous day's high right there. You see that? That's what I ultimately want to reach for, that liquidity. So if I go back out to the daily time frame, on the daily time frame, we got Sunday's high. Remember, on the daily time frame, I asked y'all, do we take out the previous day's high or the previous day's low? So as I drop out to the daily, those are realistic targets that you could be aiming for. But we could come up to this midway point of this gap and reject it and come back down lower. That's why I'm showing y'all a quicker objective to get in and out the market. You don't want to be holding these positions. When you're day trading like this, you don't want to be caught holding a trade for too long. You got to have realistic targets, realistic objectives. So let's say we cut through this gap right here. Also, remember when that macro, during these macros, it can be very volatile. So I'm gonna highlight this 5-minute fair value gap right here. The market is somewhat still low resistance, but the algorithm has been slowed down. It's not really sped up right now. So it's kind of slowed down, moving real slow. And that's because it's Sunday. It's not much to expect on a Sunday. But if y'all just joining, make sure y'all hit that like button, subscribe if y'all brand new to the channel. I definitely appreciate it. Let's go down to the 1 minute. Just ranging so far in the 5-minute fair value gap. We're also inside of a macro. Still inside that macro. So I'm going to go ahead and set up my chart from 10 o'clock to 11 o'clock. I'm going to go ahead and set that up. 10 o'clock to 11 o'clock. Now, I'm not going to be here for this whole time because I've been live streaming for a while, but I want to watch price and see what it does. I might keep the stream running as well. So from 10 o'clock to 11 o'clock. 10 o'clock to 10:15, 10:15 to 10:30, 10:30 to 10:45. So what y'all expect in the comments? What y'all expecting for the in the news this week? What do y'all see coming for the upcoming weeks, upcoming days? What can y'all expect? What's y'all sentiment as far as the overall market? What do y'all see coming? How do y'all see Q2 2025 playing out? What do y'all see for Q2 2025? Daryl, you said some of my coworkers were blaming Elon recent actions as the cause for the Tesla stock to going down. I checked out the charts and saw inefficiencies down from the dip and just said, yeah, sure. Shout out to you, Daryl. Like I said, Daryl be in the front class of my live streams. The front of the class during my live streams. And I'm glad you picking up these concepts because guess what? You have the advantage over 99% of people out there investing, out there trading. You learning these concepts, you have that advantage. You're seeing stuff that you shouldn't be seeing. That's what I always say. When you're watching price, you're starting to see stuff that you're pretty much removing the veil and the matrix is being revealed to you. A lot of y'all, when y'all watch me, you're taking the red pill. When you just come to my channel, you've been trapped in the matrix. So what I'm doing is I'm unveiling the matrix. Now it's 10 o'clock. We got 10 minutes left. So it just turned 10 o'clock, 10 minutes left. And that will end the macro. So we began the new hour. Just started a new hour. So over here on the right side of my screen, drop down to the 1 hour time frame. That's the higher time frame. And let's see what it wants to do within this hour. Again, we're reaching for, I asked y'all earlier, what was that return? And it was $2,950. So let me redo that again. $2,950. What was the return? Let me see right quick. So I asked y'all if y'all had $250,000 and you wanted to take a trade, the $250,000 is your equity. That's your equity. So let's say you get rich off of XRP or crypto or any other asset that you have that you own, a home or whatever. You starting off with $250,000 in equity. That's not a lot of money. For some people it might be. For a lot of people it's not. But $250,000, that's your equity, and you're gonna risk. Let's go look at the risk. I didn't look at the risk. We're risking on this particular trade that I've been live streaming and showing you. We're gonna risk. Let me see. We're gonna risk 0.48% for a return of 1.8%. So at a $250,000, what's your risk when we're risking 0.48%? My rule as a trader, especially when you're a beginner, do not risk no more than 1%. No more than 1% per trade. Per trade. So every trade that you take, no more than 1%. No more. So are you sure, Daryl? Is that $1,200, $250,000, 0.48%? I'm gonna go off your word. So you're willing to risk at a $250,000, 0.48%, that's $1,200. Okay, I got multiple confirmations. That's not gonna hurt you. $1,200, if you have equity, $250,000, $1,200 is not gonna hurt you. That might be hard for some people to understand because, you know, some people are more strapped for cash. But if you're sitting on $250,000 and you decide to take a trade, $1,200 is not gonna hurt you. You're risking $1,200 for a return of $2,950. That's one trade, then you're done. Let's say you take that trade and you get it correct. Are y'all gonna trade anymore or are you gonna be done for the day? Actually, you could be done for the week. It's all subjective. You could be done for the day, you could be done for the week. Ike, yes, shout out to you, Ike. If you learning these concepts, it don't matter what the president does. It doesn't matter what Jerome Powell does, because again, I'm showing you how the markets are algorithmic. These things, these concepts repeat over and over again. So you can make money on both sides of the coin, on both sides of the market. There's nothing stopping you. Because of the markets are 24 hours a day, you can make money all day, every day. You don't have to be in the herd of these investors on YouTube. You don't have to be in the herd of these people on X and social media. You don't have to be in that herd. You can separate yourself from all that by learning this, watching my channel, learning these concepts. You can separate yourself from all that other bullshit that y'all see, which is noise. You can separate yourself. That's all noise. And like I said, when I start my live stream, I kind of rely on y'all to tell me the news because I spend majority of my time analyzing these markets because I know what's going on. I'm watching price right now live. And it can be taxing. It can be just like a job. So when people go clock in at 9 and 5, sitting here watching these markets is just like a job. You have to have a foundation though. What I'm showing y'all is the foundation. Specific times of the day. I'll show you the Asia session. I'll show you the London session. I'll show you the New York session. So you can build out models where you can determine what time of the day I want to be in the market. It's 24 hours a day. You can say, okay, right now, I want to be in the market during Asia. I work all day or you might work a night shift. I work all day and I want to be in the market during the Asia session from 8 o'clock to 12 o'clock midnight. That's the specific time of day I want to be analyzing the market. And there's plenty of opportunities within the market, like I'm showing you right now, that you could be in and out the market, whether it's going higher or going lower. And then throughout your day, you can ignore all the noise, all the hype. You don't have to get caught up in none of that. So that's all I'm saying. Yes, print your own money. Print your own money. Print your own money. Pretty much when you learn in the skill set, you become a money printer. And this is the same asset that I'm long-term investing. So yeah, my position long-term is at sweet price levels. But there's opportunity while y'all are being like, talking about dates and all this, y'all want to know how many times have y'all, somebody talked about a date and it didn't happen? Well, something's going to happen on this date right here. And it didn't come true. And a lot of y'all are depending on Ripple and the SEC and regulations. I ain't waiting on nobody. There's money to be made right now. So there's no time to be waiting. Money don't sleep. Money don't sleep, especially in the financial markets. Y'all who remember the Wall Street movies? Money does not sleep. These markets are electronic, going digital, and they're 24 hours a day. Look how the market is doing exactly what I'm telling y'all. And this is going to be a good live stream to go back and watch because I'm outlining step by step what the markets are doing. Step by step. We got 3 minutes left in the macro. 3 minutes. Let me go down to the 1 minute time frame. Remember, the right side of my screen, that's the higher time frame. Left side of my screen is the lower time frame. You said Moon and Pool do not share what Boss is sharing. Is Pool that I don't know. I don't know who Pool is. Again, I don't know all the characters in the crypto space. Again, I spend a lot of my time individually locked in, having an advantage over everybody in retail. Look at this 1 minute Sibby right here. 1 minute Sibby. Excuse me, not Sibby. 1 minute Bissy. 1 minute Bissy. We rejected or we bounced off that 5 minute fair value gap and we displaced higher. Now let's see if we want to hold and continue higher. And what I'm trying to do is show you that the market is seeking liquidity above the market. And once it goes there, I'm going to end the live stream. So however long it wants to take. Being very high resistance as we are extended in the move. Y'all say Mr. Pool is a joke? Okay, that's who y'all referring to. Mr. Pool. Like I said, boy, if only y'all knew what I knew. Mr. Pool is a joke. Some people might say differently. Again, I don't subscribe to all that noise. I don't subscribe to noise. This ain't noise right here. This is showing y'all what's really going on in the markets. I'm showing you exactly what's happening in the markets, showing you real time that the market is algorithmic. There are algorithmic bots. For example, I like to do this. Let's go ahead and do this right quick. I'm still trying to develop this, but let's go down to from the 1 minute time frame. Let's go down to a 5-second time frame. So every candle takes 5 seconds. Every candle takes 5 seconds. The same concepts apply. Right now, we're trading inside of this 1 minute BISI. We just retrace down to this BISI right here on the 5-second time frame. Let me highlight that. Right there. 5-second BISI. Do you see how the market retraces down to that BISI and displaces higher? Here goes another one right here. Another 5-second BISI. This is algorithmic trading. This is high frequency trading. This is where you're starting to get in the realm of algorithms and robots. But is Mr. Poole going to talk about this? Is Mr. Poole going to talk about this? Is it random that the market just trades down like that and displaces higher? There goes another small one right there, but I'm not going to outline it. Order block. Let's outline the order block. Let's see right quick. Let's see. Again, this is high frequency. It's very difficult. Very difficult. So again, just bouncing around. Also inside of that 1 minute fair value gap. So I need to zoom out. Let's go out to the let's go out to the 15 second. 15 second. Back out to the 1 minute. Again, you can get lost on those lower time frames. On the 1 minute time frame, market consolidating. And it is not necessary to go down to it's not necessary to go below 1 minute. But you better believe there are people on lower time frames below that 1 minute time frame running up a bag. And what they're doing is they're just going to something like this. They're dropping it down. They say this is buy side liquidity right here above that high. That's a minor buy side liquidity. Now let's go back down to a 5-second time frame. What they're doing is they're going down to discount. They're finding an entry and they're getting out right here at this high. They're getting out right there at that high. So they're in and out, in and out, in and out. Right now, market profile consolidation. New mindset. I agree with you. They're definitely running out of steam to influence. But you know what? You know what doesn't run out? You know what doesn't run out? This shit that I'm showing you right here. This shit right here that I'm showing you. I can do this all day, and people gonna be willing to watch this all day, every day, because again, the markets don't sleep. These markets don't sleep. The algorithm does not sleep. So people will watch this all day compared to an influencer that's hyping, you know, the whole face, holding the face thing, you know, everybody regurgitating news, scrambling for news, even making up shit. So I'm not over here talking about nothing news related. I started off my live stream, but I'm just reacting to the headlines from mainstream. I'm not even giving an opinion about it because I really don't care about the news. But what doesn't run out is this shit right here that I'm showing you. Yes, Ike. If y'all just joining or new to the channel, this works in all markets. Again, it works in every asset class. I've demonstrated that as well. Down to stocks, down to currencies, down to bonds, down to crypto, down to gold, down to silver. So y'all think the gold market, is just a market ran by the central banks and they're accumulating? No, I showed y'all that the gold market is algorithmic as well, because there's a lot of derivative paper products out on gold and silver. It even works in trash meme coins. Yes, this skill is to financial freedom. Most definitely. Most definitely. Shout out to you, Lenny. You say you've been watching ICT Basics. Now, the thing with ICT, which that's my mentor, hands down, he the greatest. But many people that come to ICT, they cannot, his format, his content is too long. He's somebody, he fits my personality. That's why I was able to study up on him. But for people in this new age, this new era, TikTok era, they just want 5-minute videos. They want quick. They are, a lot of people's attention spans can't resonate with ICT. Imagine sitting through 3-4 hour lectures every day. If there's 5 days a week, he's doing 4-hour lectures. And within those lectures, imagine staying for every hour, every minute of that lecture. Most people can't do that. I'm a young man, but I'm still old school. Like that's how I learn. My personality is sit down, take notes, just old school type learning. I don't like to learn fast paced like that. I'm somebody who's I'm not slow at all, but I like to sit down and give me the details. Take your time. And a lot of people are turned off by ICT because he's too boring, But that fits me. If you sit here taking your time and you taking this long to teach, I'm looking for those type of people who are requiring your time and your interest, just like I'm doing. So y'all think the way I'm showing y'all this right now, let me zoom back out right quick, go out to the 15-minute. The way I'm teaching y'all right now is the same way that I learned. The same exact way. That's why my live streams be kind of long, because I sat through long ass live streams learning this information. And that's my mentor. If y'all brand new, I'm not going to never denounce my mentor. I sat there and studied this information. And most people, he has over 1 million followers on YouTube. But you better believe 1 million people didn't go through, and that might be discouraging. Oh, it's oversaturated. No, it's not. Again, you know how many people that did not go through the process? It's like an initiation into it's an initiation process, and it requires your time. Just like the people that come here every time I live stream, y'all have been initiated. Just like you said, Daryl, you looked at the stocks and you're starting to see shit that you ain't supposed to be seeing, and it's popping out at you. You have to be initiated into the fraternity. You have to be initiated into this fraternity. So that's what you're being, like I said, it's only 1% of traders that are successful. 1% of traders that are successful. The 99% have no clue of what's going on. And I'm in the 1% of traders. Now, y'all might be like, oh, this black dude, oh, he bullshit. You know what I'm saying? Whatever, however y'all feel. It don't matter to me because I don't have to be on YouTube. I don't have to be doing YouTube. But there's a gap. What I seen was there was a void in the crypto space. I come from the traditional markets. I come from the NASDAQ and the S&P. I come from Forex, trading the dollar, the euro, and the pound. And guess what? My mentor denounces crypto. He can't stand crypto. He feels like it's the mark of the beast. And yes, it is. But guess what? It's still something that you can make money in. Because if you can make money in foreign exchange markets, if you can make money in the NASDAQ and S&P, it's still all corrupted. All this shit is not real. All these markets are not real. None of this shit is tangible, but it allows you to make money, unlimited potential. So the same thing applies to crypto. The same exact thing applies to cryptocurrency. And imagine learning this skill set, learning what the 1% of traders do, and then also coming into crypto, learning about XRP and what the 1% or the central banks are doing. Imagine learning about what the central banks are doing with cryptocurrency. So combine the two, learning the skill set of the 1% traders, and then also learning what the 1% are doing as far as cryptocurrencies. You're looking at a future billionaire. Now, will I reach billionaire status? No, probably not. But in my mindset, like the potential, if somebody was to give me $100 million, I'm not asking for no 100 million either. I'm going to go get my own 100 million. But if I was able to get $100 million, I'm going to take $100 million. I'm going to turn that shit up to $1 billion. But at the end of the day, the skill set ain't to be money hungry. Like all this shit, the goal with this skill set is to provide financial freedom. Like everybody should want to do shit in life. Like it ain't all about making money. As long as you can free up your time and never have to ask or work for, allow people to control your life, allow people to tell you what you should and shouldn't be doing, getting up at 4, 5, 6 o'clock in the morning, commuting in traffic, as long as you can free your time from that, that's all that matters at the end of the day. Not having to clock in at somebody's job, you can go make your own money. And then you learn this skill set, you get to a point where, you know, your boss ain't gonna be able to tell you anything. You know what I'm saying? He ain't gonna tell you, you know, you might have to fill in for somebody at work. Somebody calls out on work and then they need you to come to work. And that's a day that you really need it. You gonna tell you and on that day that you was off because you decided to learn this skill set, you wanted to trade that day, your boss is gonna call you to come to work. And you're going to tell your boss, to hell with that shit. To hell with that. So, hopefully that's some motivation to y'all. The goal is financial freedom at the end of the day. The goal is financial freedom at the end of the day. And I know a lot of people don't have time, but guess what? If you don't have a lot of time to do what I'm showing you right now, the market kind of went stalled out right quick. But if you don't have the time to do what I'm doing right now, I also teach long-term strategies. So I got over 20 strategies that I can employ in the market. Y'all done seen them. I done showed y'all several of them. So when I'm walking you down from a higher time frame down to a low time frame, I'm showing you how y'all can do the same analysis. So essentially on the higher time frames, you have less opportunities that present themselves in the market. So that means those fair value gaps on the monthly time frame, they take longer to form. So that means you have less opportunities for an opportunity to present itself. So in order to combat that, you must learn short-term strategies, which presents dozens of opportunities. Here right now, during within 2 hours, I've shown y'all several opportunities that present themselves in the market. For example, on this 15-minute time frame, within this Asia session, which is 4 hours, I showed you a fair value gap right here, which is a BISI, buy side imbalance, sell side inefficiency. And then I highlighted, well, if you missed that one, there's another one right here. 15-minute fair value gap. So essentially, you have 2 opportunities so far within this Asia session, which is a 4-hour session. There goes 2 opportunities that have presented itself. There was one also down here, but we didn't trade down to that. So I'm gonna remove that. So you've had 2 opportunities so far within 4 hours to find a trade setup. But if you're on that monthly, weekly time frame, those setups take longer to play out. So hopefully you understand what I'm demonstrating. And then as you continue to drop down to lower time frames, more opportunities present themselves. More opportunities present themselves. From the 5 minute, let's go down to the 1 minute. On the 1 minute time frame, every 15 minutes, you can find one fair value gap or an order block. And never say you don't have time. Because when I started, I didn't have time. You know what you got to do? You got to make time. You're going to make time for whatever you want in this world. You're going to make time for whatever you want in this world. So let me see if I can do this right quick. I want to pull something up. Let me find this video. Let me find something right quick. Maybe this might inspire y'all. I got this video saved. It's a personal video from ICT, to be exact. This is from my mentor, and this is gonna be motivation. This is gonna be motivation for y'all. I'm about to show y'all this right quick. So let me minimize this right quick. And I'm gonna drag over this video right quick. Let me see if y'all see this. And I'm gonna mute it. I don't want y'all hearing the audio because it's personalized. So it's an 8-minute video. It's an 8-minute video. Y'all paying attention? Y'all press 1 if y'all paying attention. Y'all press 1 if y'all paying attention. Y'all paying attention? This is from my mentor. This is ICT, the famous ICT. This is a private video. I had to pull that up right quick. So this trade that he's about to take, this was a multi-day trade. This trade took about roughly maybe, I want to say 2 or 3 days. This trade took about 2 or 3 days. This is the NASDAQ in the futures markets. This is the NASDAQ. So you already know that I cover the NASDAQ and S&P. You wonder why I cover it? Well, my mentor covers it. This is a short video. I removed the audio. There's no audio. And guess how much he made in this one trade. I want y'all to just guess. Just throw out a number. How much y'all think he made in one trade? How much do y'all think he would make in one trade? And this trade took maybe a few days. Somebody said $10 million, $2.5 million. No, man, y'all got to be realistic, bro. Be realistic. What's realistic in a few days? This is like a swing trade, short-term trade. All right, y'all ain't being realistic. Y'all not being realistic. Okay. Let's go ahead and show you. I'm going to play the video. Look over here in the top left. I don't know if y'all can see this. Over here in the top left, you might have to zoom in because this is a video. I can't zoom in. He has 10 contracts, 14 contracts. Look how, and he sped the video up, by the way. What he's doing is he's shorting the market. He's shorting the market. He has 14 NASDAQ contracts on. Look at the price. Look at the fluctuation. He's shorting the market. It's currently in profit $50,000. Currently in profit. He's looking at all the liquidity pools that I highlighted. Now look over here in the bottom left. Let me remove that. Let me remove that right quick. Let me pause y'all. I'm gonna pause y'all comments right quick. 1 second. So look over here in the left side of my screen where my cursor is. His take profit is down here in the bottom left. Y'all see that? Y'all let me know if y'all can see that. That's his take profit. The same shit that I'm showing y'all. This is one trade that took a few days. Well, he actually has 14 contracts on right now. This is high frequency trading. What does this say over here in the bottom left of my screen? What does it say over here in the bottom left of my screen? Where my cursor is. There you go, Lenny. $100,000. Yes, 100K with $100,390. That's his take profit. He's managing the trade right now. It's currently at $55,000 right now. It's a multi-day trade. So this is short-term trading, but he's holding his position and he's looking for the liquidity down below the market. He's shorting the market. So let me go ahead and speed this up a little bit. So I sped it up a little bit. So you can see right now, he's shorting it, but it's coming back against him. Well, that's okay because he's holding it. He's not day trading this. He's just holding it for a few days. You can see how many people are comfortable after going from 50,000 back down to around 25,000 and it's coming back against you. But what you're doing is you're holding your position. You're just holding your trade. Somebody said too small. You might have to zoom in on your device. And what he's doing is over here on the bottom left right here, he's seeking a take profit level down here, which is an old fair value gap below the market right here. for a profit of 100,000. Now look at his stop loss. Remember, and when you're trading, you can move your stop loss below your entry point. So if the market decided to come back and stop him out, he will be in profit of $11,000. So you didn't lose nothing on the trade. So, but he's looking for the market, which is algorithmic, to go to his take profit, which will be down here at $100,000. And this is a multi-day trade within a week. So imagine making $100,000 within like 3 days and 1 week. What would y'all do? What would that do for y'all? What would that do for y'all? Making $100,000 in a week. What would that do for y'all? Do y'all think it's possible? Do y'all think it's realistic to do that? And again, it all depends on your equity. Yeah, it depends on your equity. So like I said, a lot of us plan on being millionaires from crypto. So let's say you working with, some people gonna be like my homeboy Ike up in there. Ike is gonna be a billionaire. So imagine being liquid. Imagine being liquid where you have, let's say you have $500,000. You have more than that, but you're willing to set up an account with $500,000 in some type of broker, and you go trade the market. And one person in this market nets $100,000. One person in this NASDAQ market. Y'all can go look it up on your on Google. How liquid is NASDAQ? How much capital flows through the NASDAQ every day? Y'all tell me. And I'm talking about the futures markets. How many? And boom, take profit just like that. Market drop down, took profit. $100,000, just like that, right below where I'm at right here, $100,000, just like that. So that was just a quick example of the potential. Once you learn this skill set, that's an example of what you could be doing in the market. The same thing. Now, I'm not to that level yet. I'm not to that level. I'm still striving, still studying, still working to get to that level. But that should be motivation to a lot of y'all. That should be a lot of motivation to a lot of y'all to want to pick up this skill set, because I know people personally who's going to make $100,000 per week in this market. I know people personally who will make $100,000 a week in these markets. You don't necessarily listen, Ike. You could have $50,000 and go run up 100. It depends. You got to have a lot of equity. Like, I'm going to say, like, just take whatever amount of equity. I don't know. I got to go back and watch that video. It's been a while since I watched it, but you definitely have to have, you're going to have a large amount of equity. And what he did was he continued to add contracts. So a lot of y'all, what I'm teaching, I'm just showing y'all one trade. When in the futures markets, there is no limit to how many contracts you can add on one trade. So when I'm showing y'all demonstrations, I'm using one contract or one trade example. But when you get to a whole nother level, there's something called pyramiding, where you're adding multiple contracts. On that particular trade that I just showed you, that was 14 contracts, 14 NASDAQ contracts on one trade. And if you go to the CME and you look at the specs and the details on how much each contract costs, you will start to see the numbers behind the contract. I'm not going to do that right here. I'm going to say that for another video. And I've done it before, though. I've also done that before, where I showed you, okay, one contract on the S&P costs this much. I think it's like $20 per point. It's like $20 per point. I forget how much it is. I got to go look at it. Because when I'm trading, I'm just trading. I'm just watching the candlesticks. I let the money come to me. Yes, Daryl, he been doing it for 30 plus years. So what I did was I took somebody with 30 years of experience and sped the process up. Just kind of like what I'm doing for y'all right now. Y'all are learning from my experience, and really you're cutting time in half by learning under a mentor. You're cutting your time in half and speeding that process up. So imagine taking a decade at a time where there wasn't any electronic trading, where you had to pick up the phone and call a broker and place your order. But because of electronic trading come about, things have become more automated. Things are more algorithmic. And that's what I'm trying to demonstrate to y'all. So hopefully y'all took some of that. Hopefully some of y'all understand what I'm trying to demonstrate. And I know people who go make $100,000, $50,000 per trade. So hopefully that's a little bit of motivation for y'all to learn this skill set. And there is no limit to how much you can make. There is no limit on how much you can make. But guess what, y'all? I'm about to get up out of here. I got some stuff to handle, but I'm going to leave this live stream running. Let's see if we want to come up to this liquidity that I outlined. You can feel free to stay around and watch price, whatever. Some people, I'm sure, watch this when they go to sleep at night, whatever y'all decide to do. But hopefully I give y'all a little bit of motivation. I'm still wanting to see price come up to this buy side of liquidity above the market. Market profile consolidating. So far this hour, we've been consolidating, but we are coming up here, take out that liquidity, and then that will complete that trade that I pretty much demonstrated for y'all. Go back out to the 15-minute. Market just retracing, still in Asia. Let's come up and take out that liquidity. I will leave it live stream running. And I appreciate y'all joining, man. If y'all brand new, subscribe to the channel, hit that like button, and hopefully this was insightful to y'all. And I'll be looking forward to see y'all on the next live stream. Until the next time, peace out. Shout out to y'all.
One, two, two.
So who's still watching? Who's still paying attention? Who's still paying attention? Who's still watching? Y'all still paying attention? I just had to prove my point. I dipped off. I was trying to see who else was still in here. Made a little surprise pop back in. Shout out to y'all for who were watching. So that let me know that y'all was actually studying price action. And that right there, just to go to show you, is algorithmic. So there you go. That 2,900 that we outlined earlier, there it is. Take profit. I really wanted to see who was going to stay. Shout out to y'all for staying and watching live price action. Again, I outlined each step by step on how to do it. If you want to go back, this is another key lesson as well. Go back and watch the live stream. Go back and watch the live stream. And I pretty much gave y'all detailed instructions on how to frame the market out and look for how to look for a setup. And there it is right there. If I zoom in over here on the left side of my screen, boom, take profit. Just like that, with precision. With precision. So shout out to y'all. I definitely shout out to y'all for watching, man. I appreciate that. So just go back and watch the live stream. I'll get back with y'all on the next one. Peace out.